Hello, viewers and traders. Welcome to another live stream. I hope you're doing well. Hope you had a good start of the week. So today is Tuesday. A bit of a slower week, I would say, especially if you compare it to what we had last week. We had the Fed, we had the Bank of Japan intervention, we had the Bank of Japan meeting. So the last week was absolutely packed, and this week, not so much. So kind of the first thing that I look at is I check out my Forex factory calendar. I see what's up on the scheduled news. So ISM manufacturing, employment data from the NZD, CAD employment data, and NFP. Out of all of these, I would say the most important is going to be the NFP print on Friday. Okay, so the NFP print on Friday should be the most important one, and kind of the only one that basically moves the market. So the NFP. Personally, I'm expecting a bit of a stronger print than the forecast. Definitely a stronger print than the previous number, but also a stronger print than the forecast. If I open up Poly Market, NFP, August 26. Let's take a look. How many jobs added in July? So the volume is pretty low, which is concerning. Okay, so the probabilities have shifted. The probabilities have shifted actually to a print. You can see 40% for 50K to 100K. It was more percentage for the 100K to 150K. Now it's shifted a bit, right? Well, I'm looking at one more thing, which is in the Edge Finder, and that would be the jobless claims. If we go to the economic data, so we go to economic data, we go to labor, we go to claims. What you will notice is that the claims have been getting lower and lower, especially compared to like June. So especially compared to June data, I think the July 23rd print was one of the lowest prints out there. Definitely lower than the forecast. So when is the next print? August 6th. Is that correct? Probably is. It probably is. So this is making me say that the jobs market is doing well in the United States. The claims are on a print or are on a trend lower, and that should make the NFP print healthy. So I'm guessing probably around 100K, maybe a bit higher. So maybe a bit higher than the forecast. Now that's a bit tough to execute. That's a tough trade to put on because putting on this trade would mean you are bullish on the US dollar. So the actual greater than the forecast is good for the currency. In this case, it is bullish for the US dollar. It's difficult to put on because the Fed is dovish. So we had the Fed meeting last week, and basically the Fed turned out more dovish than expected. So that is pushing the dollar down. You also have the intervention from the Bank of Japan, which is pushing, just hide this. So the intervention from the Bank of Japan is pushing USD JPY lower, so lowering the value of the US dollar. That's another bearish catalyst for the US dollar. And you're getting the Middle East stuff, which is developing well, I'm guessing, or that's what the market expects. If I check out Brent, and Brent is the best indicator when it comes to the Middle East. So I know a lot of you use, or actually most of you use US oil, which is not really the best indicator. I found that Brent is a bit more accurate because it's tied more to the Middle East. So it has been on a path lower. Today is blue, yes, but yesterday was a big red candle, big red candle, which is making me say that the market is expecting a opening of the Strait of Hormuz, some sort of a deal, some sort of resolution, and that could be considered bearish for the US dollar because it is expected that if the Strait of Hormuz opens, if there is a deal, it is expected that the inflation pressure will go lower, right? So the inflation pressure will become lower. So that is why putting on a long trade on the US dollar is not really something that I want to do. And even though I'm expecting a strong NFP, I don't think I have a massive edge in buying the US dollar. Now, after checking out the Forex calendar, I then go through the breaking news. So let's take a look at that. It's good for you to see my process, my daily process of what I do. Usually I go to market moving. So the last post was from the US Treasury Secretary Bessent. We may have an Iran deal tomorrow to open Hormuz. That was yesterday at 13:43. Qatar language has been drafted on a possible US and Iran deal. That was yesterday at 12:44 my time, of course. So today, no developments. But the market is definitely expecting a resolution, or a de-escalation, or just the opening of the strait. So then I go to Forex, and I usually focus on the news that is in red. So you're getting some UK stuff. Japanese Finance Minister Katayama, that could be important. Bessent has trust in our policy stance. Bessent's remarks acknowledge Japan's efforts for fiscal discipline. Okay. Let's scroll more. As far as currencies go, what is this? Is this the... No, it's not the yen. It is the NZD, I'm guessing. What happened with that? NZD USD. Not much. Or am I missing something? Anyway, it doesn't matter much. So other than that, I'm not seeing super important posts. NZD unemployment rate, no talks between Saudis and Houthis via mediators. I guess what the markets are watching for today, Trump discussed efforts to reduce escalation, converge viewpoints. Traders no longer price 25 basis points of Bank of England rate hikes this year. I guess what most of the market is looking at today is this week, if the strait actually opens up. So is there a real deal? Is the strait actually going to be open? Could we get that de-escalation? It is still the biggest mover of the markets. It is still the biggest catalyst out there, because whatever you're trading on this list, you are essentially trading oil and you're trading the Strait of Hormuz. Personally, I don't have a lot of confidence in a long-term solution, maybe a brief opening of the strait. Maybe it lasts for a couple of weeks, but long-term, I think we just get stuck in a forever war. I think looking at also the past data, looking at the last few months, I'm not seeing any sort of substantial positive developments on US and Iran. Okay. So it's been a bit tough to trade. It's been a bit tough to navigate the current markets. As far as my positioning goes, I'm still in Swiss yen. So trading view, what is up for today? Would it help if I reset? I don't know. So Swiss yen, I'm in a short position. I'm holding, so I closed 60% of the position. I'm holding 30%. I'm betting on a stronger Japanese yen. Now that is a theme that you can execute on that is not really connected with the Middle East. So you get some alpha without the beta, without the correlation to the Middle East. That's pretty nice. That's pretty good. So Swiss yen is a good pick. I'm going to keep on holding that for now. I would say in the next, I don't know, 2-3 weeks, 1 to 2 months, I think the yen goes up even more. Now with the yen, you're getting 4 factors actually. First, intervention. Second, hawkish BOJ. Now they didn't do a surprise rate hike, but they were hawkish when it came to future projections, or forward guidance. They had hawkish forward guidance. Hawkish BOJ, third, you're getting GPIF, pension funds. So that's happening in the background. The Japanese pension funds are selling foreign assets and buying domestic. And fourth, Scott Bessent. So Scott Bessent, you're essentially getting the US to agree with the Bank of Japan. So you're getting a joint effort to push. You're getting a joint effort to push JPY to the upside. So 4 big factors for the yen to strengthen. I would say that is really important. I would say these 4 factors combined together are very, very powerful. And I would not really want to bet against that. Maybe in the short term, but long term, I think the yen does create a trend to the upside, a larger trend to the upside. If you look at the last couple of times where the yen kind of changed direction, we can go to USD JPY. It'll give us a bit of a more clear picture, you can say. So 22 October. This was it. This was a big turnaround in the price, and there was a lot of potential to make money buying the yen during this push lower. So that was pretty good. Then you had 24. You had July. This was the intervention, and that was the start of the move lower. Then the Bank of Japan did a surprise rate hike right there, so they pushed it even lower. And that just kind of shows you the power of what happens when all of the confluences come together. Okay, now this is pretty good for us. This is pretty good for us new traders, and the reason for not new traders, but for us, let's say as traders, because again, you get the alpha without the beta. This could happen again, no matter what happens in the Middle East, right? So a big trend on the daily chart. What was this? 2,160 pip move. If we get a similar one right now from the peak like this would be a similar move, and this is definitely tradable. So there's going to be a lot of opportunities to get in. There will be pullbacks, there will be corrections, there will be basically many opportunities to get in on the trend. That's why this is actually pretty good news for traders. Volatility is coming our way, and the best part about it is it's not connected with the Middle East, which I love the most. So that's kind of the best part about it. I do want to mention, if you want to get the Edge Finder, which is the software that I just used to go through the unemployment claims, and which just told me that, look, the unemployment claims, they're going lower, which means the jobs market is doing better, which means that the NFP will probably print stronger than expected. That's how I'm seeing it. So if you want to get the Edge Finder, you can click the link in the description of the stream, or you can just type in A1 Trading Edge Finder. Okay, and go to all right there. Okay, so you can find it. With my code, which is Marco, you get 25% off on the Edge Finder and on the A1 Trading Discord. So if you want to join the A1 Trading Discord, get all of my trades, all of my knowledge, all of my analysis, plus a bunch of other successful traders, well, there's also a link in the description. I will also post a link in the comment section. Give me 1 second. Stream links. You can even join for free. So the Discord is free to join. And then later down the line, if you choose to do so, you can become a paid member. Okay. So yeah, code Marco gets you 25% off on the Edge Finder, on the A1 Trading Discord. Do take a look at our reviews. So go to Trustpilot, check out the score. 4.8 out of 5, 242 reviews. See all the reviews. Read through them, okay? So read through the reviews and you will see that I'm not talking out of my butt, that what we offer actually works and the traders are really, really happy with the products. So this kind of a score in this niche, in the trading niche, is very hard to get. 4.8 out of 5. I don't know any other company in the trading niche that has such a high score. Okay, so let's continue. Marco, show me your TradingView watch list from top to bottom. Well, this watch list is general. And then if I'm in a trade or if I'm looking for trades, I put it on the top. So here, I'm in a trade right now on Swiss yen, so it's on the top. But then I just have some Forex pairs right there, okay? I have some indices, the main indices. S&P, NAS, Nikkei, Dow, Russell, DAX, FTSE. I have metals, gold, silver, copper, platinum. I have crypto, Bitcoin, Ethereum. I have general, US oil, Brent, VIX, DXY, JXY, TLT, bond yields. Okay, bond yields are going lower today a little bit, it seems. So it's a general watch list. My main stuff that I'm trading or watching is always on the top, always here. The star of the show this week is the SPY, the SPX. So let me put on my different view. Let's go to ETFs, SPY. So the SPY, new all-time highs, looks crazy, looks really good, looks super bullish. We had the pivot out of the V reversal. We had the pivot when the Fed turned dovish, okay, which is Wednesday last week. That's where most of the market was pricing in or expecting a hawkish Fed. But then Warsh came out. He had a bunch of dovish statements, and he didn't even want to comment much on gauging inflation or how they will fight inflation in the future. So that was interpreted, and I'm interpreting that as massively dovish. And the market agrees with me. So the market is saying we're going to get lower interest rates in the future than expected. Stocks rallying on that. So SPY looks great. The Qs, big recovery. Also, this is the bottom where Leopold got liquidated, or he had to sell his holdings to Citadel. Usually when a big player gets liquidated like that, a big fund, usually it is a signal of a bottom. Okay, I think a similar thing happened in 2022. Okay, now my date is not working. Yeah, TradingView just sometimes kind of freezes on me. I think somewhere here the Cathy Woods lady got liquidated or something happened. Cathy. Yeah. So this lady got liquidated or something happened to her fund somewhere near the bottom, and her fund is ARK. Yeah, ARK Innovation ETF. She hasn't been doing well. From the all-time highs, her fund is down 51%, so not looking so great. But yeah, just my point being that a liquidation of a big player could be a signal of a short-term market bottom, like we had here. We got a crazy V reversal. But I think most of that was influenced because the Fed was dovish. And Fed being dovish is a big reason for stocks to rally. Gold is starting to fall, if I saw that correctly. So gold is starting to follow. Today it's blue. Corn is still not doing anything. So Bitcoin is, so some people call Bitcoin corn. I don't know why, but it's kind of funny. Bitcoin has been super flat, doing nothing. Interesting. But yeah, stocks, crazy. RSP, which is the equal weight S&P, is up on the day. or is going up. Sorry, went up yesterday. Looks pretty bullish. The Mag 7 starting to recover. Biotech, home builders. This is what I wanted to see. So semiconductors, which has been a big leader of the industry. The semiconductor ETF is still at the 50 EMA, so it's still struggling. Does that matter much? Well, I would say no. For my personal strategy, I just need the SPY to be above the 50, the 20, and the 10 EMA, and then I can look for breakouts on individual stocks. So I did take HPE yesterday. This is a new position that I have on Hewlett Packard, or HP basically. New position, breakout out of this base. We got a big move up. We were surfing DMAs, surfing the 50, broke out of resistance. Pretty clean, worth a stab. So instead of trading the SPY and the Qs outright, I do prefer to do stock picks such as HP. I know Best Buy was pretty good, BBY. So Best Buy worked out well for me. GH was good, if I remember correctly. Let's take a look. Yeah, GH was okay. I did take some losses though. So for this particular strategy, I am break even during this flat period. So this is kind of a bad period to be trading breakouts. But hopefully we recovered now. Hopefully we have reached a new market regime. Hopefully these all-time highs will create a nice steady uptrend. And we serve those EMAs. The perfect market condition for this strategy would be this. Or this. Or this is good as well. This is horrible. This is horrible. This is pretty bad as well. This is chop. Okay, Marco, don't trade the SPY, but to trade the SPY correlated pairs. No, I trade individual stocks. So I could also trade the SPY. I may put on a position on the SPY or the Qs outright, but I would rather play individual stocks and just buy into breakouts on individual stocks. That's what I personally like to do, and that's something I've started to recently do. Let's go through the comments. So good morning to everyone. Sluggy, hello. Gold already finding sellers. World Cup will make employment rate be even bigger. Had the same impact for June in CAD. Yeah, could be, absolutely. See, Aussie NZD had pulled back. Data wasn't that bad. Oh, wrong screen. AUDNZD. I know Alan is looking to short the Aussie NZD. Looks like it has recovered. We had probably some bearish news for the New Zealand dollar. Okay. With retail so long on USD, I think risk for us dollar remains to the downside on NFP. Meaning if we get a miss, I'm expecting UJ to drop more. Yep. I'm a bit flat on the dollar, a bit neutral, because I'm getting a lot of forces that are pushing it up and down. So I'm staying neutral. I'm not really seeing a massive edge in buying. I'm not really seeing a massive edge in selling at the moment. Bar replay, yeah, it should still work for me. Short in Swiss yen. I wouldn't take a short here. I'm just holding my short position on Swiss yen, but I wouldn't go in now. Max, hello. Bro. Max says, would be so good to have an API for the Edgefinder score to plug into a script in TradingView to backtest more. That would be pretty cool. Might be an idea to raise to A1. Yeah, definitely send it to Nick. Kind of an extra paid service. Yep. Could be a good idea. So definitely, if you want, you can send a message to Nick. Cathy's fund not looking good. Yeah, it looks really bad. She's getting roasted all the time on Twitter, which is it's pretty funny. But yeah. What's up, Marco? Any thoughts on USD CAD? Well, as far as USD CAD goes, or anything with US dollar, if I'm looking to trade it, I need to have, I got taken out of this position, so this was a loss. I need to have a view on the US dollar. And as I just mentioned, my current dollar view is pretty neutral, pretty flat. So I can't really do much here unless or until I change my view. So how I'm seeing the situation for the dollar is NFP strong, CPI hot, Fed dovish. So this would tell you I should buy the dollar into the NFP, buy the dollar into CPI, and sell the dollar into the Fed or right after the Fed. And that is a solid trade idea, but we're getting a looming intervention. We're getting positive developments in the Middle East. We're getting oil, which oil is going lower overall. And that is creating uncertainty for me. So buying into the NFP, buying into the CPI may not be such a great idea as I thought. The issue with NZD is unemployment, but I'm short Aussie NZD too. Let's take a look. So unemployment rate. If we open up NZD, okay, big bump higher. Yep. Big surprise. So August 2026, 5.6%, previous number 5.3%. Yep, that's an issue. And one thing that I know, the RBNZ is super hawkish. They announced a crazy amount of hikes. The market is pricing in a crazy amount of hikes. And that may not be so realistic if your unemployment rate is going up, right? So if you massively hike, you will hurt your job market even more. So the unemployment rate will go up even more. That's why this is interpreted as dovish or bad for the currency. Check gold. What do you think about it? I sold Aussie NZD as a re-entry plan with half size, so let's see. They're pricing into hikes. I would love to take a look at the pricing of rates in the rate probability website, but I don't think, I don't have access to it. It's paid. Yeah, I don't want to pay, so I only have the RBA, which the RBA is actually on the path to not hike as aggressively. I think on the Edge Finder we also have the rates as well. If we go to rates projections, let's do Aussie and let's do NZD. Yeah, so NZD, a lot of hikes priced in. You can see the NZD is in red. A lot of hikes priced in. It's not gonna be achievable, or it's not gonna be manageable to hike so much if your unemployment rate is rocketing higher. Marco, just buy my word for it. I do trust you. I just found it on the Edge Finder as well, so that's good. Gold. Let me cover gold, and then I'll have to wrap it up because you have James coming on after me. Gold, it's pushing up today, so it's up 2%. If I look at the chart, in my personal opinion, it's still stuck in no man's land. And what is a little bit concerning is that the SPY is doing so well, or the SPX is doing so well, while gold is just still doing nothing. So unless we can break out and move out of the range, I will be patient. We are sitting below the 200 EMA. You have this looming trend line right there. You have the 4K level below. We're just in no man's land. So I would like to see the price either break the 200 EMA or break the 4K level. Then we can do something. Then we can discuss about potential trade ideas. Anyway, that's it from me. I want to repeat, if you want to join the A1 Discord, you can join for free. If you want to become a paid member, you can use the code Marco to get 25% off. This is also for the Edge Finder as well. It's a nice discount. The links are in the description. You have James coming on in just a second. Thank you very much for watching, and you can catch me in, I think, 1 to 2 hours during my second segment. So let me just find the mid-roll. Okay, so thank you. See you in the next one.
If you're looking to get funded and want to save big on prop firms, check out our website, a1trading.com. On our website, we have a massive catalog of different sponsors and prop firms that are offering really competitive prices to our live stream viewers. On the screen right now, you see a QR code. If you scan that, it'll take you to this page that I'm looking at to scan all the different offers. You can also filter by one-step and two-step accounts. You can also look at futures, Forex and CFD prop firms, and even prop firms offering stocks. You can also select your preferred prop firm challenge size, and check out our menu at the top for tons of different prop firm perks and giveaways. For example, every Monday we do a weekly prop firm giveaway that you can sign up and add your name into the hat for free. Additionally, we have prop firm reviews for notable firms, and we even have a side-by-side comparison tool where you can compare two firms head-to-head. Save big and find the right prop firm for you over on our website, www.a1trading.com. Thanks to our various sponsors who make this show possible. Now back to the content.
Hello, ladies and gentlemen. Happy Wednesday, happy afternoon, evening, good morning to everyone. Hope you're all well. Interesting question in the chat. How do we know market direction? How do you do it? Very simple. So there's two ways I go about finding the market direction. You have a moving average, which is obviously a technical trend detection, which is what I use. So there is that way. And then there is also the Edge Finder, obviously. So for example, what we have is bullish and bearish readings. They do vary between neutral, bullish, bearish, and very bearish, of course. But if we've got, let's say a very bearish reading, very bullish, whatever it may be, I go to the charts. I look at the 250 exponential moving averages. If we have them moving to the downside and the Edge Finder is bearish, then I'm looking to go short. That's the direction. If the Edge Finder is bullish, the moving averages are bullish. Again, that's the direction. Very, very simple. If any of those things aren't aligned, there is no trade. If the Edge Finder has not got a reading and there's a trend, there's no trade for me. If there's no trend, but the Edge Finder is giving a reading, then it's a case of I've got to wait for the technicals to do something. So there you go. Starting out the stream strong. Max, Modi, Sluggy, Gabes. How is everyone? It's good to see some familiar faces, as always. My rapper. I wish I could be a rapper. Do you still look at Aussie New Zealand? No, I've completely scrapped that trade. Hello, James. Why do you scrap Aussie New Zealand? Short idea. Because the Edge Finders lost the Aussie New Zealand reading. So I was looking at it this morning, actually, Christoph, when you tagged me in the Discord. I was like, you know what? Technically, it looks really good. So I'll show you the technicals, and then I'll show you why I've scrapped the idea. So I'm not going to go over the full thing just yet anyway, because we've done it for the past couple of days. So we rejected the weekly level of support, which is, up here. So this was sort of key number one. God, my camera's cut out again. Sorry, guys. I don't know why this keeps happening. There we go. Should be back. Technical difficulties. We're starting out well. So yeah, we've got the weekly level of resistance that came into play. And then we did establish this bearish trend. We've got the lower highs and we've got the moving average cross. So overall, very simple type of setup. We then take the fib from the high to the low because we want to be sellers. And that gave us the 61.8 and the 50% retracement. So I was looking to be a seller within this sort of, within this fib zone. Now, the problem is I went to the Edge Finder just to review before I actually set a pending order or actually look to take the position. And Aussie New Zealand has now dropped down to -3. So it's a neutral reading. So it's lost pretty much all of its score. And what we're actually seeing is 2 out of the 3 pillars, which is economic growth, the labor market and inflation, have turned bullish or are bullish. So as a fundamental trader, I cannot justify being short right now. The only thing I could really lean on with Aussie New Zealand is the idea that the RBNZ is looking to potentially hike rates into 2026 and 27. So there is that idea, but as things stand right now, the fundamentals just don't justify this position. I do really like it, and the temptation is absolutely there to jump in. But as I said, I'm a fundamental trader at heart. I just can't do it. So that's why I've scrapped it. And also, we are seeing a little bit of a rejection here around the 200 daily moving average. The daily is bullish. So yeah, it's not great. I think I'd rather just wait a little bit, see how it goes. If we do end up breaking this level of support here on the daily, I might attempt to short position, just a very small one on a technical basis. But as of right now, yeah, again, there is just nothing there for me. Rapper Sluggy, yeah, I'm not sure where the rapper thing came from, actually. I know someone said I look like some guy. I can't remember who it was either. But yeah, I've been compared to a lot of things recently, which luckily none of them were bad. So I'll take that as a positive. And I had some people say my voice was soothing, which was also an interesting point. Thoughts on EuroCAD? Yeah, we can have a look at EuroCAD. What else have we got here? Could anyone explain why pound Aussie went down yesterday and broke its daily trend? Yeah, okay, we've got some things to look at then. So we've got EuroCAD, pound Aussie. Hello, James. Thoughts on Nasdaq? We'll have a look at Nasdaq as well. Jeremy, good to see you. Tell that one dude I told him it was going to spike. He owes me $100. Which dude and what was going to spike? I need some context there. Is it that the RBNZ is so much concerned about CPI than unemployment they just did first hike of 2026? So much concerned about CPI than unemployment. I'm not sure. We'll have a look at the New Zealand data in a second. So we'll start from the top, which was pound Aussie, I think. Oh no, sorry, EuroCAD, and then we'll move down, and then we'll end on the New Zealand data, and then we'll take it from there. So what's going on with EuroCAD? I don't really think there's anything actually that's piqued my interest here, because we did just close out of a position on EuroCAD actually, which was really good. We closed out about 3% on this bullish move here. Actually, let me just double check. Was it EuroCAD? Yeah, it was EuroCAD. I took my profits around here, so I wasn't in for the full move. But yeah, we got a pretty good position there. But as of right now, I don't really have anything, which is one reason we had the TP at the level it is, just because we are coming into a pretty strong level of resistance here. The edge finder reading is 3, it's dropped a little bit. So overall, there's not that much here. And again, the 3 pillars that I like to look at, which are the 3 economic categories, or 3 major economic categories of growth, labor, and inflation, 2 of the 3 are bearish. So actually, this doesn't really suit anything that I would be interested in here. So although, again, we do have 2 out of the 3 that are bearish, we've still got a positive 3 score. So fundamentals are a little bit more bearish, but the overall score is neutral to slightly bullish. And then the technicals, I can't justify being a buyer here. And then fundamentally, I can't justify being a seller, because although the resistance looks quite nice to just sell from, it doesn't really make any sense to do that at this moment. So EuroCAD, I actually see it quite flat, to be honest with you. What was the next one? Pound Aussie. So why pound Aussie went down yesterday? That is an interesting question. I've not been paying attention to this market, but we can definitely take a look. So it broke its daily trend. I'm not sure what you mean by it's broken a daily trend here. Overall, this is still a bearish market. So use a 9-day moving average to trade. No. No, thank you though. But yeah, so pound Aussie, I don't really know what you're talking about. If you just mean this red candle, it doesn't mean anything, to be honest. It's just a bearish candle. I don't think we really had anything specific regarding the UK or Australia yesterday. And regarding the trend, nothing's broken. This could maybe be a pullback to actually buy into. Let's see what the edge finder says. Maybe pound Aussie is getting a bullish reading here of +7. We've got the 3 pillars. Again, bullish. The only negative factor actually is retail sentiment, which I always say isn't a huge deal for me. It's not something I really care about too much. Now, although we did slightly break below the fib, I would still be willing to take a chance on this, just because the edge finder score is pretty solid with a score of 7. If it was anything lower, I might just scrap the trade. But in this case, I wouldn't mind maybe taking an attempt. So although the daily is still in a bearish trend, which is a little bit of a counter trade for me, it's not fantastic. I wouldn't mind maybe seeing a little bit of a correction of this left side, potentially back into the previous daily support around, or weekly support, I should say, around sort of 2, I guess we could say, just keep it a round number, simple. So I suppose that's the approach I would take here. Although it's definitely not perfect. It by no means is I don't know what the word is, like an A+ setup, as some people may consider it. Mastermind 81, good evening to you as well. Okay, so New Zealand heat map. Let's have a look, or the economics here. Yeah, I'm not sure what New Zealand's data actually is off the top of my head. So got a pretty good bullish score here, actually. 66.67%, not bad whatsoever. Growth, pretty flat, you know, no change from the prior forecast. Manufacturing PMIs are decent, 59. Services not great, actually, at 47. Yeah, not fantastic services, but that's okay. Retail sales are all right. Inflation did actually beat forecast for at 4.1, up from 4. PPI also beat forecast. That's good. Unemployment rate did have a slight tick to the upside. Nothing overly major, but yeah, something to consider. So what was your actual question? Is the RBNZ more concerned about CPI than unemployment? Yes, I would say so. I think the inflation data at the moment is very much a focus of most central banks as opposed to the labor market. I think specifically with the RBNZ here, what we're seeing is unemployment, yes, did tick to the upside, but it wasn't by that much. And I think runaway inflation is a little bit of a concern if we don't see the Strait reopen fully, and we don't get a full sort of ceasefire, peace deal, whatever you want to call it, in the Middle East. So I think inflation is a big sort of a big concern for the central banks at the minute. So yes, it wouldn't be a surprise if they are putting a little bit more weight on the inflation side of things as opposed to the labor market at this time. That doesn't mean obviously a central bank will allow the labor market to crumble to battle inflation, but I would expect that's a little bit more of their focus right now. Gold, yeah, we can take a look at gold. The Euro New Zealand short fib rejection also happening, but dropped on the EF score. Yeah, it's a little bit unfortunate. So yeah, the Aussie New Zealand trade still does look really good, but again, the fundamentals have completely dropped off, which is a real shame. Euro New Zealand was previously getting a bearish reading. I know we were looking at it. What were we doing here? Oh, I think we were looking for the break lower, if I remember correctly. So let's just recalibrate a little bit here. Now, I think what we said yesterday, if I remember correctly, I didn't like the idea of drawing the fib here because this is a higher low relative to the previous low. So technically speaking, based on just candle development, this is kind of an uptrend, although we are still in a downtrend according to moving averages. So there is an argument to be short at this point, again, based on technicals, not necessarily fundamentals. The stop loss at the previous high is quite nice because we would allow room for the 200 moving average to act as dynamic resistance if price moved adversely for us a little bit. And I think the R&R potential is pretty significant, actually. Even if we got down to the previous lows around 1.88, let's say, this would still give us around a 1 to 6. So I do quite like it, but again, it's the same problem as Aussie New Zealand in terms of the score just has dissipated on us. So there's not really anything we can do about it. I mean, it's still -4. It's not tragic. You know, it's still bearish, but I think the A1 guys moved the filter a little bit on the edge finder. I could be wrong, but I'm fairly sure, unless I've got a bit of psychosis, I'm fairly sure the edge finder was 5 and above was bullish, -5 and below was bearish. I'm fairly sure that filter has now changed because I think 4 was neutral previously, but my criteria personally hasn't changed. If it's a 4, it just doesn't feel right because all it really takes at this point is one data flip, and then it's going to end back in neutral, or possibly even bullish. On the other side, it could be the start of a much deeper reading. You know, it could go from -4 to a -9. So it does obviously weigh on both sides, but I would rather stay a bit more cautious than aggressive at this point. So yeah, I would keep this on the watch list for sure, but I would stay a little bit more cautious on the Euro New Zealand, especially considering we do have significantly better opportunities based on scores. So, you know, pound New Zealand, pound US dollar, pound yen, pound Swiss, pound CAD. In fact, all of the pound pairs, or at least most of them, reading bullish here. So we've got a clear regime, or a clear trend here that we theoretically want to be a buyer of the sterling. So that's not necessarily a bad sign, but obviously what we need to avoid is getting overly concentrated in the UK, because we also have the UK 100 reading bullish. So that could be a little bit of a trap you need to watch out for as we move throughout the week. Euro dollar. Yeah, okay, we'll take a look at euro dollar. I think I said that earlier. We will do that though. Looking for a 50% rejection on Swiss yen. I'm short Swiss yen, expecting interventions and soft US JOLTS data. Interesting. Okay. Why are you expecting interventions is my question. We already had the MOF and the Fed intervene, or the US Treasury intervene. So I wouldn't necessarily be banking on more interventions. It wouldn't be a huge surprise if they did, but I kind of don't expect that, just because they are so expensive to conduct. So, you know, my thought process when it comes to the yen and interventions really is the fact that, yes, they could intervene here, maybe get dollar yen back down to 150. But what I see here is, if they did that, that is just an even more attractive level to be a buyer. I personally think the lower that they push dollar yen, the more aggressively it's going to push back to the upside, because it's going to induce even more buying at better prices or a discounted price. Bearing in mind, interventions don't change the policy. They don't change the regime of the market in any way. So the lower this market goes, the more attractive it becomes for buyers to get back in and continue higher on positive swaps. So I think the best approach for the MOF to really take is actually allow dollar yen to just climb back up, then save their money, intervene back, you know, wherever the next line in the sand may be, let's say 164, for example, then intervene again and just defend one level rather than continuously intervene, push it down, and then it just rocket all the way back up over the next 6 months. I just don't really see the appeal for them to do that. You know, I could be wrong. Again, as I always say, I'm not as smart as these policy people. You know, if I was, I would probably be doing that job. But this is just from my humble opinion. Right, what else are we saying? What else have we got? New Zealand US dollar. Okay, we'll do euro dollar, then New Zealand dollar. I don't want to get too sidetracked. I'm still thinking, I was still liking it on a reasonable pullback. Yes, James, they changed to 4. Yeah, okay, I thought so. What about gold? Okay, we'll take a look at euro dollar, New Zealand US dollar, then we'll go to gold. Yeah, 4 was neutral, not tripping. Perfect. Okay. I was a bit worried that I might have early onset dementia or something. Anyway, just personal tips for the EF. Use why I use. Don't look at the scores, but the trend of the score. Yeah, I do account for the trend of the score, Max. That's also a good point. This guy isn't even real Asian. He sounds like a damn UK immigrant from Congo. Me, my friend. What do you mean doesn't sound like a real Asian? I mean, I'm 40% Vietnamese or Chinese. I did a DNA test. I'm not sure which one it is. It's one of the two. It didn't come back too specific, but I'm definitely not from Congo. So it's a very interesting thought. But yeah, I'm also not an immigrant. I was born here. So very, I've actually not heard that one before, but it's fine. Strange that DAX is at all-time highs, but the EF is not giving a bullish reading. No, not necessarily, Gareth. We can cover that in a second, though. It is an interesting point, which we can definitely take a look at. So euro dollar, I am short. However, I don't really like this position anymore. The reason I'm still in is because the entry is still valid for now. So at the time of entry, I was expecting the dollar to continue higher. I did expect continued tensions within the Middle East. You know, in turn, oil prices up, inflation up, yields up, dollar up. That was basically the regime continuation I was expecting, along with the sort of daily level that we saw on the left here, daily downtrend with the moving averages, rejection of the 200 daily moving average. It looked okay, and I think the thesis behind the idea is okay. Now, again, the reason I've not closed it is because we've not actually seen any break of the entry. So we're still within or testing the 61.8 level. We're still below the 200 daily moving average. So there is a possibility we could see a rejection and continuation lower. The reason I'm not a fan of it, though, is because there is obviously no bearish reading for euro dollar on the edge finder. We're actually seeing the opposite. We're seeing a very clear sell the dollar theme actually on the edge finder. So I'm kind of trading against the hard fundamental data, which isn't something I like to do typically. So while I do remain short, I actually, if we break above this 200, I'll cut the position and go back to being relatively neutral, because I do like the idea of being short into the longer term, but now probably isn't the right time. So if we look at the sort of higher timeframes here, I'm also expecting basically a continuation of what we've seen on a sort of historical pattern side of euro dollar, where we come up and create these lower highs, which is what we've done recently, and then we have this larger or longer term sell-off. So it very likely could be a situation where we actually see a little bit of a higher move to the upside on a daily or weekly time frame, and then we continue lower after that. And we've got a very good seasonal pattern that comes in on euro dollar as well. I think it's around the end of August into the start of December. Euro dollar is historically very bearish during that window. So we'll see how it goes. But yeah, it kind of a neutral one on my side at the moment. What did we say we're going to look at after? New Zealand US dollar, I think Sluggy wanted. Let's see. Yeah, so I know we were discussing this one earlier in the week. It's interesting because I wanted to see a little bit of a deeper retracement towards the fib zone right here from obviously the low to the high. However, we didn't get that. What we've actually seen is a rejection of the previous highs here, which does make sense. It's completely fine. We did look at this possibility as well. But that just means there's no entry for me. So the downside is that we could maybe just enter this. It's still a pretty clean break and retest pattern. But then my sort of targets come into play. And if, again, we zoom out to this weekly time frame, do I want to be really buying this? Because the problem is, let's say I bought right here with a stop loss, I don't know, let's say at the low of this weekly candle for example's purposes, and I had to take profit here, it would be just over a 1-to-1, which, isn't awful. It's still an executable trade for me. But I just don't really want to do it. I just think there's better opportunities. It's just not something that interests me at this time. So it's not that I necessarily dislike the trade. It's just I think that there's other places to go in the markets right now. Okay, so yeah, the DAX. So the reason we have seen the US, well, the global markets, specifically, Nasdaq, DAX, FTSE, so on and so on, and the Dow doing so well isn't necessarily because of a fundamental reading, Gareth. It's because of the optimism we had around the headlines yesterday. So we had pretty optimistic news that we might be getting a reopening of the Strait, which of course lowers inflation or inflation expectations, lowers yields, and in turn will allow central banks to be a little bit more dovish if that is sort of a mandate that they were going to take. So that's the optimism. Then we've also just got general risk on news. So there's a mix of just general risk on flows, but then also the optimism specifically around, excuse me, the cause and effect of the Strait and the news development. So that's basically what has driven these markets. So again, it's not a case of, oh, we had CPI come out or labor data or whatever, and that drove the move. That's a little bit of a misunderstanding on the market driver there. Jeremy, you're with me on the sells on Eurodollar. Very nice. Gold trying to break again on New York. We have some JPY move. Yeah, so gold we can talk about. I'm still long gold. Cautiously long gold. So I had, again, I've forgotten to draw the positions up here, but I am long from, it's around 4,030 roughly and around 4,000. I've got two different entries, very small, unfortunately. There was 0.01. So it's quite frustrating because I was at the time expecting gold to continue lower, but we've clearly not got that on the recent developments. So what is pretty nice for gold is not just that we've got the edge finder reading bullish, which is right here with a score of 5, which is, good for an edge finder reading. We've also broken above the 200 H4 moving average, which is the first time this has happened. Well, since May. Obviously, this was in a significantly bearish period, though this was still the height of the Middle Eastern situation. So this, wasn't much of an indication. However, obviously now we've got positive developments. We've broken above the 200 H4 moving average, and we're currently testing these previous highs. So what we really need to see is a break, retest, and continuation, or at least a break. We need to see a break, a new high printed, and then a higher low printed, and then I think it would be a lot safer to turn in or to have a more solidified bullish bias. Again, because the edge finder is bullish, that if we can get a clear trend change in behavior within the price action, I think that would be fantastic. But I can't really do much with that until we've cleared out these highs, because it is also a possibility we actually just reject and stay range bound within this, the range that we've been stuck in. So it's a little bit early for me to definitively turn bullish, but I think, as I said earlier, I think last week, that the progress we're making towards seeing gold bullish again is coming step by step, although not very quickly, granted. So the EF is not for day traders, as I caught a decent long on the DAX. No, Gareth, it's a completely different thing. So it's not that the edge finder isn't for day traders. It's just that the force that drove DAX, the Dow, and yesterday's move, it just wasn't a fundamental release. It was a news headline. So yes, you can use the edge finder for day trading if you've got a way to do that, but it's just different components. It's like saying, let's say, I don't know, Nvidia did an incredibly strong earnings release and that drove the Nasdaq up. Doesn't mean that the edge finder was useless in that situation. It's just that the edge finder doesn't compute that information specifically. So yeah, it's just different things. Ray Beast, good to see you. So model took some New Zealand US dollar longs 2 days ago. As I expected, had positive flow on the Nikkei and it ripped. Very nice. Mentioned yesterday that it's a news week and the low of the week might already be for gold. Yeah, very possible. Absolutely. It really does depend. We've got, what do we have? NFP coming out on Friday. So it absolutely could be the low of the week, depending on what the data comes out as. I think general consensus is that we are going to see relatively weak labor data. I don't really have anything to back that up with. I don't go that deep into fundamentals, try and figure out what my personal forecasts are. But it does seem like general consensus on the street is that when we aren't in for fantastic data. So if that is the case, we could continue to see the dollar weaker and we could in turn see gold continue higher. And if we do get further positive developments within the Middle East, it's very, very possible that we see gold begin a bullish trend from here. Although, actually, having zoomed out to the daily time frame, we are retesting this daily 50 moving average after the cross. So again, this could be a little bit of a sign, actually. We might just stay range bound. I'm not saying that is going to happen. I actually do stand slightly more bullish here, but as I said earlier, I do just need to wait and see, really. Okay, so I think we're caught up on the chat. I don't think there's anything else specifically to look at. We were paying attention to pound yen yesterday. I think it was it yesterday or Monday? So what I have been saying about the yen intervention, actually mainly on dollar yen, but it does apply to pound yen in this case as well, is the daily 200 moving average. The fact that we've had a really nice rejection off this 200 moving average after the interventions on the yen. We had a strong daily candle close yesterday, and it seems like today we're also catching a bit of a bid. And the edge finder here is very bullish on the edge finder. I personally wouldn't mind being a buyer here. I think it does make sense. So something maybe like this with a relatively tight stop. And the reason I would want to tight stop here is just in case we get another intervention. Again, as I said, I don't think that is the base case. I think the base case is we continue to climb on the carry trade. But of course, anything is possible. So I wouldn't want to allow this market to come back down and create a new low. If it comes back to revisit this low, I'll very likely just get out of the trade, depending on where the stop exactly is. But I would expect something a bit more like this, where we just continue to run higher, throughout the rest of the year, or at least until we see the BOJ actually take some action. RBNZ still hawkish, so looking to short. They are, but we are still expecting some Fed expecting Fed hikes. So again, we will have to see what the data says for the US this week. We could see, again, if the labor data comes out weak, we could see the idea of rate hikes continue to get priced out, but who knows? Gold's broke. Let's see if we wick again or push massively. Yeah, we will have to see about gold. Again, I think it's a little bit early to tell, but with the Edge Finder and the recent developments in headlines, I do think it's a reasonable idea to look a little bit more to the long side. Silver's already up more than 3%. Is it? I've not looked at silver in quite a while, actually. But yeah, silver could also be quite a nice buy, actually. I've just seen we've come down to this level. It's not actually that perfect, but we're sort of within, the previous highs over here, break, sort of retest, if you will. We do have that, death cross, golden cross on the daily. It's a little bit of a problem. However, yeah, the idea of being a buyer of silver could also be a pretty strong idea at this time. But yeah, we'll see. So something I am paying quite a lot of attention to at the moment is the Dow. I really want to be a buyer of the Dow on a pullback. So we have broken out. We've created new all-time highs. I'm looking at either the previous highs here that does line up with a really nice 50% retracement, or maybe this high here. I really wouldn't want to be a buyer here, but I would take the opportunity if it came. But this is kind of my, less than ideal entry. I'd really like to see this, break, retest, continuation, maybe even fill this gap that we've had and see if we can continue from there. The Edge Finder is bullish on the Dow as well. The technical setup is great. We're in the bullish trend here. Fib lines up with these previous highs. So again, it looks great, but we'll see how it goes. Also looking at equities, Palantir had a crazy spike of 30%. Did it? Very good. As always, I don't really pay attention to the stocks, but as long as you're making some money, Ray, that's good stuff. Can you analyze the yen? My friend, I've been talking about the yen so much over the past 2 days. I'll be honest, there's not much else I can say about the yen. We just looked at pound yen. I spoke about the yen, and we looked at dollar yen as well. And yeah, the current standpoint I'm in is that the yen will continue to be weak. There is no reason for a strong yen right now. We did have the interventions, sure, but that's a temporary fix for a longer term or a much more structural problem. So yeah, there's just no bullish case for the yen at the moment, I don't think. However, I need to be clear, that doesn't mean going blindly buy the yen. Oh, sorry, that doesn't mean going blindly buy things like dollar yen and sell the yen, of course. So short term, we might see a little bit of range bow, we might see some fluctuations, but overall, over the next 2 to 3 months, I would expect these yen pairs to just continue to run higher. The carry trade's still there, so there's no reason for it not to. I'm unable to talk with live support. The message, we're not connected. I paid for the Edge Finder. Can you please inform the support team? Patrice, the thing is, I think the A1 guys are not in the office yet. So the stream starts earlier, but that doesn't mean A1 is alive. They are in US time. So I think they might start later in sort of the European period. So I'm not sure what time it is for them. And I don't know what time they're in. I can't remember where they're at. Atlanta, I think. I'm not sure exactly what time it is over there. I would try again at, maybe in another hour. I think then the team will be in the office to help you out, but I will drop them a message. In fact, I'll do that right now so I don't forget to do it. Just bear with me. There you go. You can see the screenshot there for you, so I will inform them. Okay, so I had an NJ short idea in mind upon a miss, but I was sleeping, bad time. Yeah, unfortunate. Again, I wouldn't like the idea actually of buying the yen, to be honest with you. As I said, I do think we are going to see a little bit of fluctuations. It wouldn't be a huge surprise. On interventions, it's not that common. We see just a V-shaped reversal. So yeah, we'll see. We'll see. Okay, so we've still got another half an hour. Is there anything you guys want to talk about specifically, or shall I just continue to run through the markets? Because I'll be honest, there's not much I'm looking at really. We did have Aussie New Zealand. That's kind of been wiped out. The Dow is definitely on the list, but nowhere near an entry, unfortunately. So I'm very much just sat on the sidelines at this time. Pound dollar is still getting a pretty good reading here. So let's take a look. Yeah, so it's... It's very much in line with New Zealand dollar. So the entry didn't get hit here. So obviously, fib from the low to the high. Wanted to see a pullback into the fib zone, retesting the 200 moving average. We didn't get that, unfortunately. So either way, there is no entry. But I am also a little bit cautious of these lower highs that we are seeing get printed on pound dollar. So previously on, the previous high here, we did reject as well the same sort of trend. So I'm a little bit worried we might just come up and reject something like this. I don't think that is the most likely outcome. I really do think we will see a breakout here just due to the fundamental bias, but I don't want to be a buyer at this time. So it's really a case of I need to see pound dollar create a new high, then I can establish a new fib from the most recent low over here to wherever the next high will be, wait for the pullback, and then look for a continuation. So actually, this could be, and again, as I always say, I don't trade trend lines, but I've gotten into the habit of actually leaving them on the chart because I do quite like to pay attention to them. So it could maybe be something like this, where we see pound dollar create a new high, break out of this bearish trend that it's been in, come back and retest into this trend line and the previous high, and then we see a continuation. That could be the approach. It's a little bit overly complicated for me. I don't like to get overly complex with technicals, but that is kind of where my brain is going right now. James, can we go through some seasonality for assets? Which ones? Is there anything you have in mind? New Zealand card longs today. Weak labor can provide an entry. Let's see. What do we have here? I suppose we've got a pretty strong level throughout there. We did break. We're currently having a bit of a retest of this level. For me, there isn't really an entry. I mean, you could force maybe a fib there. I don't really like that, though. I'd rather have it from the previous sort of major swing low. Bullish trend, I do quite like it on a technical side. There's not really anything for me here, but I could get behind the bias of being a buyer. May you please analyze US oil? Yeah. What do we have going on here? Yeah, there's no fib there. So given the developments in the Middle East and the Strait, I think the most likely move for oil really is to continue lower. I don't see a reason for that to not happen. The only risk really is obviously we get re-escalations or we get, some sort of news that the Strait will remain closed, then we can see oil continue to move higher. So it's very much a case of what headline are we going to get next. So in this case, I don't really have a bias because, again, it's headline driven, not necessarily fundamentally driven. So it's really a case of if we get if we get positive headlines, that'll be negative for oil. If we get negative headlines in terms of escalations, that would be positive for oil. And if we see the Strait continue to remain closed, we could very well start seeing $100 back in oil. Something I did mention, I think it was yesterday, is the fact that oil seems to, Trump seems to be playing a bit of a game with oil, really. We get high oil prices. It is uncomfortable. Trump doesn't want high oil prices and high inflation. That's not a good look for him. So in those cases, when oil does get a bit too uncomfortable, and this is my speculation, by the way, I don't have proof of this, then de-escalations come, and that will move the oil prices lower, which again is beneficial for him. But then once that's happened and we've got a bit more of a normalization, we get the re-escalations. And when oil went back towards 92, we got de-escalations again. So it could very much just be a case of actually we get a bit more of a sort of situation like this, kind of what we saw during this period where oil went up, then we got headlines, it went down, another headline, it went up. So I would remain very, very cautious on oil. I don't think it's a tradable environment, at least for me. It just doesn't suit the way I trade, which is fundamentally backed central banks. And that's pretty much it. And obviously, technicals. I just don't have anything to rely on there with oil. Hopefully no tweets today. Yeah, I mean, it would be nice to get back to normal market conditions, but we'll see. We've had less than ideal conditions with Trump in office, but that's trading. You always got to have a bit of fun. What else do we have here? How about some dollar pairs and equity seasonality? Yeah, we could have a look at that. Let me just catch up with the chat. Please analyze Nasdaq 100. We did already look at these markets, but to specifically look at Nasdaq, I would say there's a very clear bullish bias here. The daily is obviously bullish. So you've got, or I would say there is two approaches to take here. Either a break, retest, and continue higher off these previous highs, or a pullback and continuation. I wouldn't really be looking to sell. There is an idea, you know, we came into resistance, we could look to go short possibly, but I don't think the trends are really supportive of that idea. So what I would really like to see is something a bit more like this, where we come back, have a bit of a correction lower. Oops, excuse me. There we go. Well, we come back lower into the 50% retracement, have a bit of a correction of this left side, maybe, you know, into some previous structure on the left, then continue higher, break, retest, and continue from there. That's what I would like to see. Whether that will happen, I don't know. But yeah, overall, I would be looking to be a buyer. Cheers, we getting a losing streak ever since coming back. Do you have any advice on that? Unfortunately not, my friend. I've not been having a great week either. Yeah, it's just not been a fantastic month. I don't really have much going on at the moment in terms of great trade ideas, to be perfectly honest. You know, I was really optimistic on Aussie New Zealand, and as we spoke about, that's just dropped off completely. So in terms of advice on losing streaks, it's just a case of continue. So this is where, you know, having your back test or your equity curve, something to look at and say, you know, let's say you've been trading for a year, you know, let's say your equity curve might look something a bit like this, for example's sake. And you get to a period where you end up just losing and losing and losing and losing, where you can say, okay, this is a losing streak. My system's not broken because, you know, over in this period, it was fine. I also had a losing streak over here. I know my average max drawdown. I know my average losing streak, blah, 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 blah. So as long as you're still within those metrics and there's nothing that's completely broken, then just continue to do what you've been doing. You know, and losing streaks are completely normal. However, if you reach a point where you're breaking your metrics or your averages, so let's say your average max drawdown, let's say in an absolute worst situation is like 7% or 10%, something like that, whatever it is, and you end up in like a 15% drawdown, something's going wrong, obviously, because you've broken out of your averages. So in that case, then you would want to go back and have a look at exactly what is breaking. Is it the market conditions that have changed and your strategy just doesn't work in these conditions? Is it a case of something's changed in your system? Maybe you're just not with it. You know, it could be in any number of things. But yeah, that's really all I've got for you, to be honest. Losing streaks are normal. You don't need advice if that is the case. Just continue, stay calm. I also there's also a bit of a narrative out there that you should size down in losing streaks. I disagree with that, by the way. I would never tell someone to size down in a losing streak. I actually think maybe not sizing up, but I would stay the same. I think the problem is if you size down when you're in a losing streak, the problem that you will get to is that when you eventually, let's say, you know, this is your losing streak. Let's say you start off risking your normal risk. Let's just say it's 1%. Okay, fine. Then you decrease it down to 0.5%. And then you decrease it, let's say 0.2%. You're continuously trying to mitigate your downside. Fine, that's a good thing to try to do. But the problem is eventually when you start winning, you might actually end up in a position where you hit a massive trade that would bring you back, but you've actually only risked 0.1% because you've been decreasing. So then you're going to have to take another position. You're going to have to start increasing risk, and then you could end up in another losing streak. I hate that. I really dislike the whole sizing down idea. I like to just stay where I am. If I'm losing, it is what it is. You know, get through it. And again, I've had a really bad month, actually. I had a fantastic month. Oh, wait, hold on. Sorry, we're in August. I had a really, really good month in June. July was very difficult. I really had a bad time in July. August hasn't started out well either. I did have a good trade in EuroCAD, but as I said, I cut it a little bit earlier, so I got about 2% on that one. But generally speaking, it's been horrible. But I'm not downsizing. I'm not doing anything. I'm just continue. This is the job. That is a fantastic point, Nick. Yes, I didn't even think about mentioning that. Sizing down after a winning streak is a fantastic thing to do. That it basically does the opposite of what I just said. So if you're in a winning streak, you know, let's say you're starting off with 1% risk, and then you, I don't know, let's say decrease to 0.7, then 0.5, whatever it is you want to do. Eventually, when you do hit that loss, it's actually significantly smaller, and then you can continue higher. So, of course, yeah, that is a very simplistic way of explaining it, but hopefully you get what I'm saying. My yen video breakdown was fantastic. Thank you again, Nick. I appreciate that. It was good to see you leave a comment. I'm glad people enjoyed that. July, yeah, no, I do agree. July was difficult. But again, that's trading. You know, it is what it is. Oh, actually, to expand, to give you some clarification, as I said, I did hit that win on EuroCAD, but I was short Nikkei. I was short the Nasdaq. And there was one other one. I can't remember what it was. Oh, euro dollar. That one's underwater as well. So yeah, it's not been fantastic. So the win from EuroCAD basically just covered the losses. So pretty uneventful. And as I said, July was pretty negative. So fun stuff. Anyway, we're going to move on. So what do we have? So we've looked at pound dollar. We've looked at pound yen. Pound Swiss is interesting. We have been looking at pound Swiss, and I'm a little bit iffy on this one. You are on the wrong live. What does that mean? Good video, James, watched this morning. Thank you very much, Jeremy. Appreciate that. Yeah, so pound Swiss is absolutely looking good. The kind of problem, though, is that we're just sideways. There is no direction here at the moment. We're not seeing a continuation higher. We're not seeing any pullbacks. So that's a little bit of an issue, because obviously I want to see the pullback so that I could get into a long position. That would also provide the retest of the previous structure on the left. We've established a bullish trend here on the daily as well with the moving averages. So we've got the edge finder in line. We've got the technicals in line. We just need that pullback. Now that brings me to the higher time frame, which we've discussed this quite a lot recently. But with Euro Swiss and a lot of the other Swiss pairs, something you will quite often see is actually the weekly trend is very aggressive to the downside. So something I don't want to do is buy pound Swiss and try and hold it forever. Now, the appealing idea of doing that is because you'd obviously be on the daily trend, which is great. You'd be getting paid positive swaps, which is great. But don't forget that the higher time frame is really, really down. And historically, what we can see is price very rarely breaks above the 200 weekly moving average. And when it does, it actually I'm going to say quickly, but this is still a weekly time frame. It does revert back down. So if you got the break above, it doesn't mean that we're now starting a new weekly trend. The most likely outcome actually is that we're going to continue lower from that point, actually maybe even more aggressively. So yeah, something to keep in mind with pound Swiss. And as I said, a lot of the other Swiss pairs as well. So you can see the pattern here as well. We come to 200, a little bit of a breakout, but very quickly revert back to the downside. So yeah, definitely a one to be cautious on. Not your channel, but A1, I was wondering why I didn't see a message. Okay. There's always two A1 live. Yeah, there is. Yeah, they do a live on the A1 channel, and I think they also run it simultaneously on the TraderNick channel. I think there's also Twitter. Is it Rumble or Kick? I think that they're live everywhere these days, which is fantastic. Yeah, shout out to the A1 guys. Real commitment. Pound CAD. Yeah, we can have a look at Pound CAD. I'm in sales on US dollar CAD, looking for the weekly candle to flip red. Okay, let's have a. Okay, we'll start with dollar CAD because I do want to see that the weekly candle. Then we'll go to pound CAD, and then we'll have a look at Australian dollar Swiss. Twitch. Twitch. Okay. So dollar CAD. Let's take a look. Weekly candle to flip red. Yeah. So with yeah, UCAD. Okay. So with dollar CAD, there was something that raised a little bit of a red flag for me on the short side of the market, which is the daily time frame. So the daily is pretty bullish here. We might end up coming into the previous daily level of resistance, which could be, again, that break, retest, follow the trend to the upside. That might be the outcome, which is a bit of a problem for me. Again, it's difficult for me to sit here and say this because the dollar is really not looking good. Again, on a fundamental side, actually, the geopolitical landscape right now isn't favorable for the dollar on de-escalations. Even the DXY itself is down as well. So it's not looking like an environment that is conducive for the dollar or dollar bulls. However, I don't want to sit on the side of dollar bearishness right now. Yet, anyway, I should clarify that. Obviously, I'm willing to flip bearish if the time comes and the catalysts are there. However, I do think I'd rather stay on the long side temporarily until I do get that signal or the trigger. So with dollar CAD specifically, I would rather just wait to see what it does at this level. Once it reaches here, then it's a case of, okay, what the fundamentals, what's the central bank expectations, what's obviously Canada doing, what's the Strait of Hormuz situation, and all of these different factors. So until we get to here, there's not really anything that I'm bothered about with dollar CAD. Pound CAD. So we did look at pound CAD earlier. I don't think there's too much. Hold on, maybe I might be standing corrected here. Actually, you know what? I take that back. Pound CAD is actually looking quite good. I must have been thinking of a different market. So pound CAD is getting a very bullish reading here on the edge finder of +8. So that's looking great. So fundamentally speaking, being a buyer, smooth sailing, happy days. Now, Pound card on the daily and weekly is bullish, and the H4, all the sort of higher time frames, if that's how you want to group them, are in a bullish trend, which is great. We've broken out of these previous highs, or the prior highs here on pound card as well. We've had the break, we've had the retest. Now, the problem really for me at the moment is I've missed the entry. So if I was paying attention, I should really have been a buyer, down here at the 50% retracement. That was how I trade. That's my entry criteria. Because I wasn't paying attention, I've completely missed the entry. So the only way I can get into this market now is something like this, which massively decreases the risk to reward ratio. The stop loss is a lot larger than I would like, because I would need it to be below the 200 moving average. And that would just allow it to act as a bit of a dynamic support if price does end up coming down. So while I do like the idea of being a buyer, I unfortunately, as I said, I've missed the entry. So for me to get re-interested, I'd need to see a new high get printed, the previous high get broken, retest into this previous high, and then a continuation higher from there. Obviously, ideally, this would also be a fib level as well. So that's the approach I would have to take. So yeah, we'll see if that happens. But for now, I'm sidelined, unfortunately. So is Australian dollar Swiss the same thing? I'm going to assume you mean the same as what we looked at on pound Swiss. Let's see. It's similar, but it's not as clean. So we do sort of follow the same idea, but it's actually more revolving around the 50 weekly moving average here. So we do end up breaking the 200 now and again. But as I said, with pound Swiss, we do actually end up coming even lower if we give it time. So something else to think about with this market. I don't want to sit here and tell you all of this and someone ends up going short, because the problem is the fundamentals are bullish. I don't want to sway you away from that idea. We are, again, fundamentally in a bullish market with these Swiss pairs, for the most part anyway. And the other negative thing is that selling a lot of these Swiss pairs, in fact, I think all of the Swiss pairs, are negative swaps. It's very expensive because the Swiss National Bank interest rate is 0. So if we're trading, let's say pound Swiss, where the Bank of England interest rate, I think at the moment is 3.75%, and we're comparing that with the Swiss's 0, it's not a cheap trade. We're going to be paying quite a lot of fees for that, on top of whatever your broker charges as well. So keep that in mind. It's definitely not a. It's not a case of you just want to DCA short positions on the Swiss pairs, because you will end up in a little bit of a considerable loss on the swap side. I made that mistake. It's not pretty. True fans watch from the A1 channel. Well, James, I started to think buying Swiss with USD and yen, unpredictable market. Yeah, you know what, Tony? The funny thing is, there we go. So the funny thing is, for the past sort of 2 months, give or take, I was actually short dollar yen around 160. That's the wrong level. Around 160, looking for an intervention, trying to basically get ahead of the move. Didn't work out. Closed a small loss, not a big deal. But the funny thing is, I was sat since then just saying, I'm not going to get involved. I don't want to be a buyer of dollar yen or any of the yen pairs. I really do think an intervention's coming. I bought pound yen, obviously this is dollar yen, but I bought pound yen around here. Again, it's the wrong market, but you get what I'm saying. I bought it about a day before the intervention. Bearing in mind, I was looking for the intervention 2 months ago. As soon as I get in, it happens the next day. It's just comedy. It's just one of those things where the yen and me, we're just not friends. It doesn't work out. So yeah, fun stuff. What do you think about New Zealand CAD stop hunt short? I don't like that already, but let's have a look. New Zealand CAD. Yeah, no, no, not for me, my friend. New Zealand CAD. Do we have an edge finder reading? No, there is nothing here. There's no bullish reading or bearish reading. So the fact that the fundamentals are neutral, we are sort of just range bound here. We're actually, again, I don't really trade patterns, but there is a very clear sort of wedge here. I think, and correct me if I'm wrong, but I think these types of wedges generally lead to a break to the upside. Is that right? Could be wrong. It could be the downside. I've got no idea. But yeah, I mean, the idea that it just broke the high and then came back into it doesn't mean anything to me. It doesn't give me any direction. It doesn't give me an indication where the fundamentals are going. It doesn't warrant a trade. Again, for me, that could be different for you. If that's a strategy you trade and it works out, then fine. But yeah, these types of things are just not for me. Simo, good to see you, my friend. Hope you're well. We are on hump day, so I hope you guys are having a fantastic start to the week and a positive start to the end of the week. But regulars are in yours, so we don't see your message. It's all good. Gold, please. Yeah, we can have a look at gold. We did do gold earlier, but I suppose we are towards the end, so I may as well have a little bit of a recap here. So I am still long gold. Again, for some reason I've lost my drawings here to actually sort of annotate where my entries are. I've got one around 4,000. I've got another one slightly higher, around 4,050, give or take around those two levels. So the problem is I was expecting gold to continue lower. In fairness, I didn't really expect it to continue higher from this point, but given the headlines we've had, it's fully expected gold will continue higher as long as we don't get re-escalations. So the dynamic really is, you know, we had gold bearish for a long time now. We should all understand the dynamic and why, but in a nutshell, it's basically because decreased oil flows. Obviously, we had less supply and higher demand. So energy prices go up, inflation goes up, yields go up, central bank hiking expectations go up as well. So that was why gold was bearish. But on the recent headline, we had news that we could maybe be seeing this rate reopen, which is positive. So if we have oil flows continuing, we could see a normalization in inflation expectations, yields normalizing or coming down. Central banks can pivot back to their initial stances. So not necessarily as hawkish, which again is positive for gold, bearish for the dollar, bearish for currencies, generally speaking again. On top of that, we do have gold reading bullish on the edge finder. So we are also in turn seeing the US dollar getting a bearish sort of tilt as well. You see that with US dollar Swiss. We see a pound dollar, obviously selling the dollar type theme here. So yeah, I mean, gold bullishness is absolutely on the table. I think it's completely fine. The thing I'm looking for now is a clear new high get printed. So clear out these previous highs, get a new high. Ideally, we get some sort of new low, which would retest these previous highs, and then we could get in for a long position on this retest. So break, retest, continuation. That would be great. It would also allow time for these moving averages to cross on the H4 and establish a bullish trend. So I think the case for gold being, the case for being a buyer of gold is there, but I think it just needs to see a little bit more of a little bit more of a development in terms of the price action to warrant me actually doing anything. Is ADP likely to affect gold? No, ADP is a pretty boring event, to be honest, Gareth. It's very much it's obviously a data print, but very rarely it's meaningful for markets, especially when we're trading like the H4, the daily time frame. Normally, as traders, we want to pay attention to CPI, NFP, interest rate decisions, forward guidance or press conferences, PMIs. But yeah, ADP generally is kind of the bottom of the barrel. It's very much like a sort of medium folder event, if you will. That's the way I see it anyway. I don't really ever pay attention to ADP in terms of its actual release. I pay attention to the data, but not its effect on the market, because generally it doesn't have one. 50-day MAs have been moving lower since gold rejected the 4,200 level last time. Yeah, I mean, the key thing with gold really is the moving averages. So on the H4, it looks like we could have the chance now to flip bullish if the 250 cross. However, on the daily, what we're also seeing is the 50 daily moving average getting tested. So we could maybe see a bit of a false breakout, return back into the range. I don't think that's the base case. But the sort of real test will be this 200 moving average. Does it get used as dynamic resistance, or do we just see a clear break and continuation from that point? I don't know. I could not tell you with any certainty, but I do lean more bullish on gold. I don't have a reason to be bearish at this time. The headlines are there, the trends there on the H4, the edge finders there. We've got the dollar weaker, so I think the stars are aligning really. Anyway, ladies and gentlemen, I've got about a minute left, and I think Alan Perez is coming to take over the show. Let me just double check. I'm fairly sure it is. The schedules are a lot more reliable these days in terms of guests and slots and things. We have the one and only great Alan Perez coming on in a minute or so. So I'll leave you with him shortly. Cool. I don't think we've missed anything. Next time you enter Yen Shorts, let us know. Wow, you're going to use me as a counter signal. How insulting. Although, to be fair, I'm not going to take offense to that one, because it probably would be a good idea in that case. But yeah, no, I think we've covered quite a lot in this stream, actually. We've gone over the US markets, headlines, we've gone over oil, yen, gold, currencies, edge finder, all sorts of different stuff. So hopefully you guys found some value there somewhere. Just to quickly end off the last 30 seconds, it seems like Bitcoin's actually getting a little bit of a bid here, which is interesting. Again, on the back of what I would assume is the positive headlines regarding the Middle East and the Strait. So it could be an idea of being a buyer of Bitcoin at this level. I'm not sure on that though. As I always say, I don't trade Bitcoin. It's not an asset I'm that interested in, so I'm not going to do anything. So don't take this as financial advice. But if I was a Bitcoin trader, I would be quite interested to see how the reaction or how the market reacts around this level. Do we end up breaking lower, retesting this level and heading towards 50,000 or 55? Or do we actually end up seeing a little bit of a bid from this point, and we can start seeing Bitcoin start creating some new highs? That would be very interesting, but we will, of course, have to see. But ladies and gentlemen, that brings me to the end of my segment. It's been fantastic to talk to you all. Been great seeing you all. Guys, stay safe. Don't get margin called. I'll see you all tomorrow, but don't go anywhere. We have Alan Perez coming to take over the show in just a minute.
Today's video is sponsored by 8cap. And did you know you can actually get a free copy of Edge Finder with the help of 8cap? The way this works, basically, if you create an account under our referral link, which I'll have linked in the description down below this video, you can actually get a free copy because they purchase it on your behalf. Now, how this works is basically if you follow the link that you'll see on the screen right now, basically scroll down to where you can see all of the different offers that we have, where if you deposit a certain amount of money into a new 8cap account, they will effectively buy our products on your behalf so that they're free to you, you get them free, and you also start trading with 8cap. Please also make sure to do your own due diligence on 8cap to make sure that is a brokerage that meets your own risk criteria. All the information, like I said, can be found in the description down below about this specific sign-up offer. Thanks to 8cap for sponsoring today's content. Now back to the video.
Good morning, everyone. Good evening, good afternoon. Just like the ad said, guys, if you guys are looking for a new brokerage, a reputable one, a well-respected one, go ahead and consider 8cap. They are offering a 20% welcome bonus for a limited time. So go ahead and use that link there. You can also go ahead and get yourself a copy of the Edge Finder as well. So it is a really, really great deal in my personal opinion. Good morning, everyone. Good morning, Kier. Good morning, Ball Out. Good morning, all of you guys. Hope you guys are doing fantastic. Things are starting to heat up here. So before I got to the desk, I was looking at my phone and I saw that the metals are ripping here today. Silver is continuing its fun. So up 4% here today, 4.45. I have this wedge here, looking at this wedge. I'm not going to trade silver. You guys know my stance on it, but it is a metal that I want to watch here to see what's going on there. So you can see that we had this downward trend line here. We're tapping into that level here. I'm curious to see what happens if we were to break out of it. And then, of course, the 200-day moving average would be the real kind of hurdle that you have to overcome. Here, gold as well, moving pretty quickly here, up almost 3% on the day. That $4,200 handle, very important for me personally here, looking to see if we can have a break and retest of this level and continuation higher. And maybe you get a change in trend for gold. Gold has been chopping around here for some time. It's been quite annoying, but I'm happy to see some momentum here in play. And one thing about gold is when it gets running, it really starts to get running. So I'm happy with the position. This is the position here that I have on right now. Again, waiting for that 4,200 level to kind of hold or break or whatever it wants to do. So if we do get the break and retest, I'll just go ahead and trail my stops here. Euro dollar, similar situation. It's actually getting some momentum here. And again, you guys know my take profit here is at the 200-day moving average where I have this level of resistance. So those are the two trades that I have right now. I'm monitoring them. I do expect some volatility today. So today we do have ADP non-farm. So basically, let me show you here on Forex Factory. This comes on the Wednesday, 2 days before the actual NFP report, and it's supposed to mimic the actual NFP report. So I'm curious to see what happens here. Previous number was 98K, and we're looking to see a forecast number of 68K, so a lower number. So I'm curious to see if that actually does happen, if that translates into volatility, and if this number, whatever it is, right, if it's lower, does actually coincide with what happens with NFP on Friday. So that's going to be a really big number here that I'm looking at. Besides that, you do have ISM services PMI as well, which I think is very important too. That's going to be a good indication, a good tell for the growth story. So we actually do have something worth looking at this morning. As far as the actual kind of flows for the day, you have Equities here just continuing on higher. I mean, look at the S&P 500, guys. Like, look at this. We had a break of all-time highs, and we have just continued shooting up. No pullback in sight. Just to the moon we go. Nasdaq is getting out of its funk there. We had this bearish trend line here on the Nasdaq. We broke out of it yesterday and are just continuing higher. So that is a good story there for the risk-on, assets there. Something happened in New Zealand. It was their employment numbers. What was it? I didn't quite catch it, but I know it was last night. Let's see. New Zealand unemployment rate shot up to 5.6%. That is it right there. So that's going to go ahead and pressure some Kiwi. Pullback in Kiwi dollar to this level here, this 200-day moving average and this level of support. Do I want to buy it? Not really. I'm already in euro dollar long. And I'm happy with it, right? I don't want to overextend myself. If it's working, it's working. So I'm going to keep myself positioned the way I am. But let me go ahead and look at the chat. So good morning, Kier. Good morning, Simo. Nick is going to come out here in about 25 minutes or so. So just go ahead and stick around. Bottle out there giving some calls for the gold right there. Yeah, the higher the better, man. The higher the better. Morning, Max. Hope you're doing well. Let's see what else here. We have Trump speaking later as well. Yeah, maybe. Does he? I'm seeing something here on the actual chat. Is this new? Is this by Nick? If you're in the background, is this by intention? Is the show comments there on the side? I don't know if that was me or you. But yeah, playing with it. I think it's a pretty good feature. I'm not gonna lie. It doesn't really conflict with what's going on here, like on this side of things. So it looked pretty interesting. It caught my eye. So what do you guys think, chat? You guys like that or not? Show in the comments there on the side. Type 1 if you like it. Type 2 if you're not a fan. I think it's pretty neat. Oh, you can also move it too. Huh. Okay, interesting. Kier says no. Fair enough. Respect it. All right, so let's see. Let's continue on, guys. Yields today. It won't let you move it from the bottom right. So it's kind of from my understanding, that it's kind of anchored in this general area. Max says no. Ricardo says no. All right, I think general consensus is no. So thank you guys for the participation there. Ball out. We can't start this, man. We can't start it. Okay, yesterday we deviated too far into the woods. We were talking about steak. We were talking about coffee. But Bala has his flip-flop beans ready for the action. I have yet to have my cup of A1 Trading coffee, but it is definitely on the to-do list. As soon as this segment ends, I'm going to go downstairs, get myself some coffee, and you're going to see a change and you're going to see a different Alan on the next segment. I'll tell you that much. You'll see a different one. But all right, let's see what's going on here. Yields, very, very important, and price of oil too. So oil, we'll start with oil. Oil had made a meaningful development yesterday. See, you guys are already cracking up. Come on, guys. Someone said chew. I was telling my fiance yesterday about the kind of discussions we were having, and it was really, really funny. I think it was Prizark, if I'm pronouncing that correctly. He was like, you just got to straight up eat the coffee beans. That stuck with me for the remainder of the day, and I thought about you, man. So if you're in the background, you made me laugh. Yeah, just eat the beans, man. We were talking about the spectrum of like entry level coffee to like when you mature and get to the dark stuff. And then the guy said, you know what? You just got to straight up eat the beans. That's interesting. So when it comes to oil here, what I'm looking at, 200-day moving average, very, very telling for me. Last time we got here, we just kind of dipped below it, right, meaningfully, and kind of stay there for a little bit. So I'm curious to see if that is the case this time. This would be a really good opportunity, though. If you are bullish on this market, if the bulls are out there and they're willing to take this stab higher, this would be the time to do it here at that 200-day moving average with U.S. oil. So this is very important, right? So if you get a bid up from here, then the argument could be made that this is a new trending market to the upside, right? You have a new high, lower high, and then potentially a new higher high, right? So that's kind of what I'm looking at from here. On the bear side, you could say that the argument is made of this happening right now, right? So you had a break below, You broke this level, you pulled back into this level, bears took over and continue it lower. So 200-day moving average, I'm watching it like a hawk here. If you were to get a pullback, I would likely probably just imagine it's like this, right? So like, for example, let me put my technical analysis hat on. You had this leg lower, pull back into resistance, bear stepped in, leg lower, then you would probably see a pullback into this level here, this horizontal level, right? And then bear step in here and then take it lower. Does that make sense, guys? Is that clear? I know my drawing is probably not the best here, but this is what it looks like for me. So if I go to a 4-hour time frame, right, this is essentially what all I'm doing here is adding horizontal levels where price has gone and then and adding pullback. So like, for example, horizontal level right here, right? Another horizontal level right here. If you were to get another pullback, it would probably be, you see this level right here, right? And then right here as well, we would extend it this way. So let me do this too. So you would see leg lower, pull back into this level, bears take over. Leg lower, pull back into this level, bears take over. Right leg lower here. If you were to get the pullback, this is probably where I'm seeing price stall. If it doesn't stall and it continues higher, then the case could be made for an uptrend. So that's kind of the way I'm looking at oil. But 200-day moving average right now is a pretty good sign here. So hopefully we stay below it. And if we stay below it, what are the implications of that? Okay, so let's talk about it. So right now, everyone's probably looking at gold chart right now, and the way for it to continue kind of moving up higher there would be if you continue to see these oil prices lower, right? So if you were to see lower oil, then that probably reduces the fears of the inflation, right? The potential inflation impacts on that, and so then you get rate odds kind of dialed back there, rate hike odds dialed back. You have yields lower. That would continue to fuel the gold story. And if you see the opposite, if you see oil kind of creep back up here, then that would kind of hurt the gold story there. So if you're a gold trader, you want this chart right here to go as low as possible. And if you're bearish on gold, you want this chart to go as high as possible. Very, very simply put like that. So oil, key spot there. Let's see what's going on. We're pretty close to that 4,200. We'll probably hit it during my segment here. So again, we'll see what the follow through looks like, if there is any. Just going down to a 4-hour chart to get very precise on the level that I'm watching. This is it right here. So this right here is what I'm watching, right? So you have essentially, this right here, and then if you were to move the chart over I'm expecting something to be happening right here. A breakout, a positive breakout like this is what I'm looking for, right? And if you do get that, then I'm trailing my stop right here below structure, and I'm going to let the trade do its thing. The next obstacle, of course, would be that 200-day moving average way over here at 4,500 pretty much. That's my outlook on gold. I'm on the bullish side right here, right now. You have, some dollar softening going on. You have potentially the war in the Middle East kind of, settling down a little bit. So yeah. Look at that. Fed Kashkari, I believe now is the time to start slowly moving interest rates up. He's not calling for, or she's not calling for, a dramatic increase in rates. So we'll see. We got some Fed talk here. Last time we had some Fed talk, we had Waller. He really moved the market. Then we also had Bessent there, kind of moved the needle a little bit too. So we'll see if this translates into some volatility. But for now, let's just look at the market right now. What it's doing, it's pretty flat. It's not really doing much. Alan is deviating without knowing he's deviating. That's pretty deviating, if you ask me. Gold rejection 4,200 and pull back to 4,140. That could be very possible, right? So gold, I guess we're sticking with gold here for a little bit. With gold, this is a very solid level of resistance, and so I've been my mistake here, but I've been talking with the assumption that it will break out, and what I'm looking to do once it does break out. But let's assume, right, because we don't know what's going to happen, that this level here, this level of resistance, that 4,200 that gold has to overcome, let's say that it doesn't hold, or let's say that it doesn't break out and it holds pretty firmly there. Well, at that case, then I would see a pullback. I'm just looking horizontally here, like this level right here. So 41.20, right? Kind of like what you're saying there. yeah, pullback into this level could be very probable. And then you could either, at this point, you have a question of, does it continue higher on that pullback or does it continue lower? So that's definitely something to be mindful of as well. So yeah, good call there. We have to make sure that we're addressing both sides of the coin, the bull case, the bear case, and anything in between. Sluggy's gonna make his 4th cup of coffee. It'd be like that sometimes, man. I will say, I'm not gonna shame you. It'd be like that sometimes. What's up? 5 minutes to ADP employment. Gold is waiting for it. Yeah, gold's waiting for it, man. We'll see what happens. 4, I may shame you. Guys, let's drop a quick record in the chat. How many cups are we doing a day? What's the max? What's your PR on coffee there? Oh my goodness. While we're typing those answers here, US ADP employment change came out a good meaningful amount below forecast. Forecast was 65K, came out at 44K. And this is supposed to, mimic in a way the NFP report that we're going to see on Friday. So we'll see if this does translate into that. But for now, let's go ahead and look at that market reaction as we're putting our numbers into the chat. So again, back to the question of the day. What is your PR on coffee? Econ Maxing. Econ Maxing says 5. Jeremy's at 4 to 6. 3 to 4. Nick's not even paying attention to the question. He's on a whole different world right now talking about gold. You guys too. Come on back. 6 to 7 is PR. 6, 7 PR. Dang, man. I will say this. I don't drink like coffee cups, maybe I drink espresso. So I'm like, for me it's like 3 shots of espresso is kind of my max there. But yeah. You already know he's going to be knowing about gold today. You know what, guys? Let's make this fun. What do we think the title of today's video is going to be? Let's just drop it in there. Maybe Nick can get some inspo. Oh, Sluggy says 6, 7 shots of espresso. Ah, dang, that's yeah, man. I think you got me beat. I'm not even gonna try. You Sluggy takes the crown for today. Whole coffee jar, dude. I will say, has some strong coffee? Cuba. I went to Cuba and when did I go? I went a couple years ago, and their coffee, bro, it's legit, man. It's legit. Cuban coffee is legit. It's so strong. It tastes horrible. It tastes like oil, man. Modi says the title of today's video is going to be Bulls Have Taken Over. The Gold Rally Has Begun. It's a pretty good title, man. Let's look at that. Let's look at that. Is the breakout happening? Not quite yet there. Title, did you buy gold? Nick should honestly, on this next title, should troll them. Be like something along the lines of, you should have bought gold. You should have known better. Something like that, right? Like kind of taunting them just because everyone's always trolling in the channel. That's kind of my pick there. Gold here, not really breaking out there, but it is catching some momentum here. So again, remember guys, I'm looking at this kind of horizontal level here on my chart, looking for a firm breakout above this level. So we're getting into that zone, but we haven't really quite moved above it yet. But we are seeing some momentum. So we were up at 2.8%. Now we're at 3.2. So that is a meaningful jump there. We'll see if that continues on. On the dollar side, DXY moving lower. It's continuing its momentum, but it isn't really making a huge leg lower. But nonetheless, it is kind of making a push lower. So we'll see. You guys know me. I think that there would be probably some bargain hunters out there if you see DXY around that daily 200-day moving average, right around 992, right over here. So we're pretty close to that level. So if you do find DXY get to here, I would expect either a flush lower, a bounce from here, or a stall. I really wouldn't be surprised if you see this. I would not be surprised whatsoever if you see DXY drift up into that 200-day moving average and then pause before Friday. And then Friday, NFP is the deciding factor whether we continue lower or higher. So that's kind of where I'm thinking DXY. Because, usually the markets are pretty quiet there right before a major news release because they don't want to overcommit or front run a position, because the reality is no one knows what the actual number is going to be. So that's kind of my thought process there on DXY. So looking to probably hold this 200-day moving average if we get there right before NFP. And I wouldn't be surprised if gold does the same thing as well. So this is a key level for me. The market's pretty much watching this level of resistance. This is the top end of the range that we've been operating in for some time. So similar to DXY, right before major news release, I would imagine that gold kind of hangs out here for a little bit right before NFP. Nick, man, what's going on?
What's up, Alan? I'm joining you early if it's okay.
Go for it, man. How are you doing?
Pretty good, especially on a day today. We gotta talk, be obnoxious about gold. What a move, man! 3.2%. That's feeling similar to back in the late 2025 days, where gold was up 3% every single day for like 2 months.
Are you surprised, man? I knew this was gonna happen. My crystal ball told me.
Man, I'm actually not surprised, simply because the chop has been so real for a while, and this is just like inherently. I feel like the last few days we've been talking about the best strategy on gold recently has been sideways, range-bound trading, and every time I feel like that becomes like a common, like, okay, so I should be range trading. It's like, boom, that's when the range gets absolutely devastated one way or the other. So we'll see, but I think gold has some room here, and at least what oil has been saying recently is maybe de-escalation is going to stick this time. We'll see.
I'm looking at that. So if I'm sure you were listening here, the 200-day moving average on oil there is really telling for me. Let me hear your thoughts on the ADP number that we got this morning. It's supposed to, by design, mimic the NFP that we'll see on Friday. Do you think that you will see kind of a repetition of what we saw today, or is it just completely random what we see on Friday? And if you think that it is, historically a good mimic, would it be wise to potentially buy gold on breakouts as we're seeing it play out today?
Yeah, that's a good question, because ADP has been interesting. It's been memed on in the past and praised in the past because it's not like perfectly correlated in the moment to the non-farm payroll number, but for some reason, there's times where it almost like leads or lags the NFP report in terms of its, predictive power, I guess, but it is more focused on the private payrolls, which is a little bit different than, of course, just the general non-farm payroll number. That being said, I think that it's, the way we've ranked it within Edgefinder is it's one more listed item. I wouldn't overweigh one over the other tremendously, but today's number, softer than expected. The previous one was softer than expected, so maybe that's signaling maybe a little bit of softness in the labor report. I think the big one that I'm watching is unemployment rate. If that ticks higher, if we did have JOLTS job openings, which came in worse than expected. So you've kind of got a story here that is continuing to sweeten for gold, Alan, because what we've got here this week, JOLTS job openings, soft. ADP numbers, soft. If the trend continues, and let's say you have jobless claims, unemployment rate, non-farm payroll, if that data comes in soft too, I think you're looking at a potential powder keg setup for gold to move higher.
I would say that employment number would be kind of that last domino, and it would be the big meaningful domino, I would say, because if you assume here, and the price action is telling us this, that oil continues lower, and that translates into yields lower, and so essentially, the direct input to inflation is kind of being taken care of, given the Fed's dual mandate of maximum employment and inflation control. If inflation is taking care of itself and you continue to see that trend in the price of oil or yields or whatever, then yes, they would have to, at that point, if you were to see a deteriorating labor market, they would really need to, it would be wise, and I would imagine that they voice this, is to pivot attention to that. And then you could start to see that dovish, repricing or going from hawkish to maybe neutral. And again, that would be that good fuel that gold really needs. So I'm
Yeah.
definitely looking for that.
Yeah, I think it's the other thing is, you know, as gold continued to trend lower and lower, there was a good chunk of the year where I was pretty bearish on it. But the change in the macro data, and then also kind of just understanding that like gold being down 30% from the highs starts to get increasingly more difficult, in my opinion, to be short. The more gold goes down, you know, at the end of the day, I think that the purchasing power of the dollar is something we all know degrades over time. And so it just makes me, it's one of the easiest things in my opinion that I think long term should go up is the purchasing power of dollar goes down and gold price on a nominal basis should go up over the long term. Doesn't mean every week, doesn't mean obviously this year, if your bet was gold's going to go higher, it's been a terrible year for you. But now you're starting to see what I think looks like a rounding out of that, you know, chart that you've got there. Looks great. Really solid potential, I think, there for a solid breakout higher. I know you mentioned you're not a big fan of trading silver. I pick and choose depending on how things are going. I like both, but it depends. I think for me personally, I prefer gold a little bit more here, but both are showing a lot of promise. Silver's up 5% today. That is kind
Hmm.
of ridiculous.
So tell me, Nick, then in this level here, if you were to see that last, well, the way I'm seeing it is that last domino effect, but for you, maybe different.
Hmm.
Is that the last domino effect? And if it is, I'm sure the viewers are wondering, and your viewers on your long form videos are wondering, would that be enough to, if you were to get a breakout here, to continue on the gold long story, or are you looking for maybe more confluences to kind of help you make that decision?
So the more gold goes up, the more interested I am in terms of the long side. I'm you know, as you know, I'm a momentum trader. So when I get this momentum going, like I don't shy away from I'd rather be buying gold up here than buying gold down here. And that sounds counterintuitive at first glance. Investing a little bit different. Like investing, if I'm buying something that I just want to stick in my portfolio and I believe in long term, the lower it goes, the better. But when it comes to trading, when it comes to following what, you know, market's currently telling me, I much prefer candles like this printing. And it's, again, a long time ago in my early trading days, I would look at this and be like, well, great. Now I missed it. I don't want to be in this. Now I look at this and I say, ah, yes, now we have some potential here. Now we have, you know, I like the squeeze that's going on here. You've got a lot of people who are bearish on gold. We've talked about this for a while. Crowd sentiment, I think, is now definitely more in favor of the bullish side. So I would definitely not be like buying it today. But take a look at this really quick. If we go look at gold's put call ratio, you can still see crowd sentiment has been really bullish recently. So I wouldn't mind seeing this on the put call ratio swing the other direction. Also, I don't know if you saw this, Alan, but we swapped out the calculation a little bit for put call, changed it to using a 5-day moving average rather than just the strict data, because inevitably with the raw put call ratio data, we get this kind of chart. We get this like really jumpy, less clear signal. So what we've done is we've applied a 5-day moving average to that put call ratio, and now we've implemented it into the scoring and all the, you know, back end stuff as well. And so now you get this smoother chart, which gives us a little bit more of an idea of the rolling kind of sentiment over the last 5 days rather than the last 1 day. There's pros and cons to doing that, just like any other moving average, right? The slower moving average is going to be less jumpy, but also
Hmm.
maybe more lagging. A 5-day moving average seems like a nice middle ground where you've got, you know, a rolling look at sentiment. Tiger says, I like the moving average look. Much cleaner. Like if you're looking at this chart, here's the S&P 500, much more gradual rather than the incredible jumpiness. And what also kind of frustrated me about the jumpiness is you would have a reading within Edgefinder and it would come and go like one day and the next day, and it would swing the score very sharply. And so we monitor when we're doing, I mean, I say it's mostly me and one other person. We look at the scoring mechanism, and we want to kind of like move away from incredible jumpiness in score. Like score should move like this. Score for assets should not move like this, because that is, you know, a very difficult to kind of The reality is stuff isn't changing every single second, especially which, Edgefinder, as you know, is a lot of macroeconomic data. A lot of this stuff is changing once a month or once a week. So, the score should theoretically not be jumping by 4 points, 5 points a day. It should be jumping gradually one way or the other. So just some behind the scenes stuff we're working on. But when I look at put call ratio for gold specifically, getting back on subject here, right now I see crowd sentiment as still very proportionally bullish. We can also see that on the net options volume. If we specify gold here, you can
Love
see
to see
crowds.
that.
Yeah, like you can see, we've got a lot of crowding of the call side. So again, I am bullish on gold, but I think more than likely, you're probably going to see some exhaustion, and maybe I heard you talking about it. Maybe that pullback into like the 4140 area. That to me looks like an opportunity where the setup sweetens for more longs. Personally, that's my take.
Awesome. And I like that pull to call ratio without even just looking at it, being a little bit more stable, more, I would say, realistic and not as volatile is a really good reflection as to the price action that we've been seeing in gold for the past couple of days, weeks there. So that's a really good addition and tweak there.
Yeah.
Okay. Pretty good understanding. Now, one thing too that I have, one more question before I pivot out here, and it's going to be a hard one. And I would say it's been really hard to gauge whether the kind of developments in the Middle East are going to hold or not. I've been wrong on this many times, and the chat here knows this, where every time we see something positive and I see a lower price in oil, I kind of say maybe this is it. But I guess it's two questions in one. Do you think that this kind of resolution that we're seeing on the horizon is one that could stay? And what would it really take for you to really make that decision? Like for me, to be honest, I don't know what I would need to see for me to actually believe that it's happening, because we've seen so many kind of hints and whiffs of like this is it. We had a whole MOU signed, right? And then that was obviously not enough to get a resolution there. So do you think this is it? And what would it take? What would you need to see for you to really kind of stick with that decision?
It's like such a good question, because it is a very difficult one. I think the answer for me is, I heard someone say this yesterday. Right now, depending on who you ask and what their social media looks like, you will have people who can confirm their own biases in either direction. You're going to have people right now who are watching stuff happening in the Middle East, and the social medias that they follow are telling them that nothing is going to resolve, that Iran will never back down, that the US and Iran will be at this for another 3 years or whatever. And then you're going to have other people who are focused on, the side that says it's going to, it's 2 days away, right? The never-ending optimistic posts. Both, by the way, have been really, really wrong in the last like 60 days, 90 days. For me, what's the best way to gauge what's happening in the Middle East? Well, as much as I hate to say it, I am not a fully efficient market hypothesis person, but the oil chart is pretty dang smart. And so if I'm going to look anywhere, it has to be oil prices, because oil prices, they don't mess around. They're watching the news without so much bias. I mean, again, I would encourage, I've said this for months and months and months, be so careful with like your political biases and your just your general bias can get so murky in terms of the way you look at markets. If you believe something, you're going to trade based off of it. And I see it all the time in my comment sections. I've got people who are like super, fans of Trump, or they really dislike Trump, or they really, are anti name whatever, right? Name whatever group or whatever thing. There's people who have that take and they will never see it a different way, and they trade the markets that way. And that's super dangerous. So for me, if I'm being kind of agnostic to bias, or trying to, the best way I know how to do that, I know I've always got a product to pitch here, but it is Edgefinder. It is looking at the economic data. It's looking at what the price of oil is doing. This is what I'm looking at to gauge my decision making, because this doesn't rely on bias. This is just looking at how CPI is coming in. It's looking at how GDP numbers are coming in. What are institutions doing? What is the options market showing me? Like, these are data points that I can kind of like hang my hat on and feel good about doing that. Whereas reading Twitter is not, for me, an effective way to trade the markets. So, my anecdotal evidence would be when it gets too extreme, you want to be careful, because when oil gets super confident that it's going to end, or super confident that's going to all go to what, it seems like it tends to reverse shortly after. But generally speaking, I'm just going to trend follow what I see here.
I love that. I love that. Yeah, oil and yields is what I'm watching.
Yeah.
For sure. So thank you, Nick. I'll go ahead and pivot out here so we can bring on Chris Pulver. I'll be back here soon. But love the conversation, man. Take it easy.
Yeah, okay. Sounds good, man. We'll see you in just a bit. I'm going to play this quick ad, and we got Chris Pulver joining the stream. Don't go anywhere, traders. We'll be right back to the show. But real quick, I wanted to tell you about today's live stream sponsor, Prop Shop Trader. If you're a futures or equities trader, let's talk a little bit about what Prop Shop Trader has to offer. So first and foremost, if you're a stock trader, there's not a lot of firms out there offering stocks. So this creates a unique opportunity for stock traders to get in on the prop firm action. Prop Shop Trader offers a variety of various different account types for both swing and day traders looking to trade futures, whether that be gold or Nasdaq or ES or YM, whatever you trade there, or on the equities side. They also have a very scalable environment where you can actually trade up to 20 accounts within the same prop firm. A lot of traders nowadays are trading with lots of different prop firms, but Prop Shop Trader wants to make it more accessible and stackable to build your relationship with a single prop. With competitive pricing and transparent rules, Prop Shop Trader stands out as a solid option to consider for those of you who are trading futures or equities. If you're interested in exploring Prop Shop Trader for yourself to see if the accounts are a good fit for your trading style, then make sure to use our promo code A1 Trading to get a really substantial discount at checkout. Our code will get you the best available prices right now. As always, I want to disclaim that prop firms are a great way to scale up your trading capital if you have the skills. So I am personally a fan of waiting until you have consistency in your trading before attempting to take any sort of prop firm challenge. But if after reviewing Prop Shop Trader, you like what you see, it fits your style, and you've done your due diligence on the prop firm, you want to push forward with it, then make sure to get that extra discount with our promo code. You can also find the link for this down below in the description. The live stream chat should also be seeing that pop up, and we have a QR code on the screen that you can scan to check them out now. Thank you again to Prop Shop Trader for sponsoring today's live stream. Now back to the show. All right, and we are back with the one and only Mr. Chris Pulver. Hey, Chris, how you doing, man?
What's up, man?
Happy Wednesday to you.
Yeah.
Do you agree on that concept I was ranting at about Alan? Is the best way to gauge the Middle East just to stare at yields and oil?
Sure. I mean, who cares at this point? Like, watch the markets, dude. They're at all-time highs. This market's ripping everyone's faces off. What makes me a little just yesterday, I got a little smoked yesterday on like defined risk trading, and I was traveling on Monday and didn't expect to see the market do what it did Monday, and then to basically repeat that Tuesday. It's like, holy shit, really? It's like the VIX is up. Like the VIX went up yesterday, as did every index, but gold and silver caught a bid. I almost wonder if the market is just like, you know what? We've had all this pent up demand. It's given one window of de-escalation again. It's just like, let's freaking go, and it's just party. Leverage, calls, rip. I mean, I've got measure moves to like 7,900, 8,000. And if we hit there, it's like, I don't want to be short the market, but at the same time, it's like, holy crap. I can't imagine that just nothing but greatness is priced or is ahead of us when, I mean, we were talking about like a legitimate breakdown, below 7,300. It didn't happen, but I mean, yields are busting highs. And I don't see them really pulling back a ton. I think we still have a big vulnerability window these next couple of months. But it's like the market is kind of front running like all the good that it has with no real escalation. And like you guys did say, it's like, I don't think we're stopping. This Middle East stuff is not going away. And it's just using it as an excuse to rip very quickly.
Yeah, it's like I heard someone talking about like basically between now and midterms, there's like this even more pressing desire from the White House to keep things cool, calm, and collected. And so I don't know. It's tricky because it's like they could just be playing the game of Iran says there's a deal, Iran says there's a deal, and then we could repeat what we've done for like the last 6 months, which is Iran then says there's no deal. We haven't been talking to them. They're making stuff up.
Right.
And then we're back to square one. And, it's so tricky to make that call. I would say personally that I agree with you in terms of, Is there a lot of great risk reward buying stocks in this moment? For me, absolutely not.
Right.
You have a lot of hype baked in here. You've had really good earnings from the Mag 7s for the most part. There's been some hype on that side of things. You had Palantir explode 30%. Like, what in the world?
Yep.
Crazy moves going on. So, yeah, it feels a little bit frothy in some areas. And so I definitely think caution is reasonable, especially people are saying my mic is low. Hold on. I'll play with that. Chris, you go for a second. I'll see if I can get my mic to work better.
Sure. Just a quick spot check. I mean, gold caught a nice bid. I am wondering too, it's like, does the market sense that with the Fed doing nothing and the market sitting here at all-time highs, we have labor market this week, we'll have inflation, another round of inflation data in the next week. Is gold going to start coming off these lows, maybe getting back above that 200-day moving average? I mean, I'd like to see if we can start carving out bottoming patterns here, not necessarily assuming we're going to be bullish, but nearly a 30% correction from the top to recent lows. Silver, same thing. I mean, to me, silver, I put a chart alarm here around 71. If we get back above $70, I'm more encouraged that silver is kind of putting in a bottom. If we end up making our way up towards this area, to me, Nick, this is like a really good looking head and shoulders. If we kind of posture here, I would want to be long silver. And we've seen this rallies and crashes. If it actually builds out a pattern, do we get a chance to participate on a right shoulder move? Do we get a chance to even see a neckline break, or is it just, I mean, like we see with the indexes, are they just going to go with no pullback? And so I think number one, how aggressive were you in the bottom of March, and how aggressive were you post FOMC? Because honestly, that's not a bottom that I would say I'm buying the bottom on Wednesday. Like, it was a one-day bet on FOMC, like the market's down, try to get a one-day bet for that Thursday, Friday pop and come back for the end of the month, but not a 4-day face rip, dude, not to the upside.
No,
so it's a tough one to be like, I knew it. It's like, I don't know. That's a tough buy to take. I don't know, as a I'd say pretty rational trader. We're seeing some pretty irrational movements right now, but could be worse because it could be to the downside, and that's way more painful. But upside face ripping stuff is, it's not bad when your portfolio is a fresh year-to-date highs.
Yep. Guys in the audience, just check for me. Is my mic sounding better now? I turned up my volume a little bit, but let me know and I can adjust it more if needed. Yeah, I mean, Chris, to be honest, was I in there buying there? Not really. I was definitely looking for more downside, and it has been a frustrating kind of period to watch. Like, for example, if you watch like the Russell, let me share my screen here. If I'm looking at like the Russell, you have this situation where you had like 3 weeks plus, what is that? That's 30 days of, grinding lower here, erased in 4. Like, that is crazy bullish move. The Nasdaq also even more pronounced. You had essentially, this was 56 days of downside move, grinding down lower, and most of it erased in just the last 4 days. It is such a bizarre market like that. Like, you would think that to get this type of movement, you'd almost expect it to have been kind of like a 15-20% down move in the Nasdaq. That's when I expect those kind of face rippers. But this was a pretty modest pullback, 10-11%, and then to get it gained back in 4 days is wild. So I don't know. I'm
and all that on a de-escalation. It's like I mean, to me, it's not like, I don't know. I mean, it's not like the coast is clear. We saw yields hitting fresh highs. We saw the Fed, staying with that hawkish narrative. We saw the AI trade kind of breaking down and catching a tiny bit of a bid, but like everything on SMH is still under. I mean, AMD is down, Micron's down, like SMH is down. It's like those aren't the recovery trades. Like, also Apple's down. I mean, yes, Amazon and Microsoft blew out expectations and they've just been awesome to the upside, but it's like Nvidia had a little recovery, but Nvidia's not at all-time highs. So I mean, it's amazing how much the index has moved with just 2 good stocks. Like Meta was down, Apple's down, but Microsoft way up, Amazon way up, and it's like saved by 2 stocks. I mean, it's a tough one to say what really led this rally and led it to this degree. So I get that it's August. I mean, I was looking at some of the volume yesterday. Like, it's still pretty light volume, and it's clearly just like running for It could just be like the power of zero DT, where it's like everyone's just freaking all in and leverage to the teeth, and it's like, let's just go, let's catch up.
Yeah, you know what's interesting too, Chris, is that historically speaking, the VIX during this period of year, typically it's like a very strong, like stronger seasonal pattern
Yeah.
than the S&P 500 being soft during this time, is that the VIX is typically strong during this time of year.
Right.
August and September, these are periods of year where you typically see an uplift in volatility. And so far, just to gauge where we're starting out, we're starting at pretty much volatility at its, kind of relative lows. You're talking about a 15, 16 VIX. Again, I did do some premium selling. I did some trades on short premium up here, but definitely was looking for a little bit more. I would have added more stuff there, but such is the way it goes sometimes.
Right. Well, I guess from a timing perspective, Nick, do you think that we have, longer VIX, and like I'd be pretty comfortable to say by, mid to late October, we at least have the VIX maybe give us a flare up towards 20 or more. But the hard part is dude, the VIX is hard to trade. Like synthetic long VIX is hard to trade.
Really hard.
I did it. I did it, and like I had that flare up to 20 something. I made $0 on it. Like basically it was a break even trade. And I was long at like 17. I'm like, you can't get to 22 for me. You can't get to 25 for me. Like the VIX is, I feel like it's almost intentionally suppressed right now. And I don't know what's going to take to really break it open. But if there's going to be a break move, it's like, this is kind of that window that I would suspect something fishy happens. Anything on the Japanese yen side, intervention, anything on the Nikkei, like, I mean, whether it's carry trade or repatriation, I mean, my big index exposure for my portfolio is VT, and VT cracked some fresh all-time highs yesterday. It's getting a nice run. It's actually outperforming the S&P this year. And so, that's kind of the big basket I've been trading, along with, all the other, puts and stuff and ratio spreads have been selling. But this same thing, it's like this thing grinded. You mentioned the day count. I mean, we grinded sideways for, I'm going to use the calendar timer. So we grinded for 39 bars, like 39 trading days is a decent stretch. We're going back to early June into literally the FOMC low in July. And all of a sudden in 1, 2, 3, 4 trading days, we're fresh all-time highs. Like that's crazy, dude. That is, 2 months of nothing. And then it's like ripping through these highs. And it just seems like, well, okay, so what do we do from here? Do we breach the highs, pull back, and we're off and running to the races still? Do we breach the highs and just pause a little bit still? Do we just go, no end in sight? And it's like, well, that inefficient rally just comes right back down. There's your volatility spike. But it's like, I don't know what that number is. Are we calling the top? Are we, have you seen how specific like Tom Lee's been getting from Fundstrat? Like,
No,
I could
what's
see
he
the
been
market
saying?
going to 7,800 and then crashing 20% and then going back up to all-time highs. It's like, that seems really like wildly precise for really just a guy that's mostly a bull. And I know Mark Newton is his like, right-hand man and his technical analyst guy. But gosh, it's like, is 78 the number, or is it like, is 8,000 the number? I've Warren Pies from 314 Research, he's talking, 8,000 Goldilocks target, 8,200 Goldilocks target. It's like, well, if we get there going before the midterms, it's like, dude, I don't have a lot of confidence into the end of the year. If we're hitting these numbers before midterms, I feel like we're going to limp in post midterms. I don't know, man.
Yeah, it's again, to me, it just becomes a deteriorating risk reward bet. Like the higher the stock market rips all in one, kind of sprint, the more cautious, nervous I get about it, just generally speaking, especially longer term. If I'm buying stocks that I like it's been tough. Like, to be completely honest, that pullback that we were starting to see, I was very hopeful that we were going to get more of it because I've been wanting to build out my positions in stocks. I think a lot of people are in that camp. Again, at some point, it will give you the flush, it will give you the pullback, but gosh, it has been frustrating to wait. So you know, I've got my eye on, you know, some shorter term trades that I'm watching. I'll put to the side the idea of buying stocks longer term unless we get a sharper correction. I've been watching, you know, precious metals maybe look like they are trying to make a move here. You've got gold pushing 4,200 an ounce today. You've got
Yep.
silver ripping through 61, 62 here. So that looks like it's got maybe some solid bearings for a larger scale breakout higher. You know, I like to, you know, on the trading side, be a little bit more momentum heavy. So if gold can get up and over, you know, 4,200, I think it has room. I think it has room to make a move on up to 4,350, 4,500. Part of the whole Bank of Japan stuff, Ministry of Finance, U.S. Treasury helping out. It does kind of just make me a bit nervous in the sense that I don't know that I think the yen is going to have some strengthening factor to it unless the Fed were like cutting interest rates. That's like maybe the strong case for a
Right.
strong yen, but I don't
Right.
think we're going to do that. And I think national debts and yields are going to continue to soar higher. So longer term, I stay with the kind of bullish gold thesis.
Yeah, I still like bullish gold. I had a question for you in the end.
Mm-hmm.
So as far as the market's going up to fresh highs these last couple of days, and this like 4 to 5 day just rip to the upside, are you thinking that this low and this low and this low? I mean, here's what I could see: if we fill this intervention move back to the upside, equities are totally fine. If we have follow through to the downside, I could see a hiccup in U.S. equities. I could see a hiccup in the Nikkei. This might start to get people's attention because we're finally breaking some key structure here that's been going since the the previous big intervention bottom.
Yeah. So here's
That's a
my,
maybe. Like I don't know.
Yeah.
I mean, but every time you bought this dip, literally intervention lows, you're just like, just buy the dip, buy the dip, buy the dip. So it's I mean, it's the good thing is you can use stop losses. If we're here's what I would consider playing. If I buy it here and I buy it here, I'm going to make sure, like if we get a daily close below this, not a wick, but a daily close. The daily close below this, I'll stop out. But if I'm long here and I'm long at the lows, we see this happen. There, tested the lows. This wick tested the lows. Same thing. It's like if we buy some now and we get the pay to the upside, great. We just go right back up to 164. If we test those lows but don't close below them, that's a fake out. See if that still heads higher. So I do think that is a potential play here that doesn't take a lot of risk. And then the flip side is if this thing really starts to unravel, then you're doing bear flags until this thing freaking gives it all the way back to like 140. I mean, if you want to pay attention, like I think the yen can move. I think we have like another 700 pips to revisit highs, or we have 1,500 pips to find some lows.
Yeah, and that's the thing, Chris, is I just pulled up the chart on my side just to look at it. So this is the dollar yen on a daily chart zoomed way out. The last time that the yen meaningfully strengthened for a prolonged period against the US dollar. Now, it happened prior to 2020, which, was one thing, but the last time that it like really made a meaningful move and continuation lower for a long period of time, obviously the 2008 situation, basically when the Fed cut rates. Like if you think about it, right? Japan, if we're looking at US and Japan, right now, there's many problems for Japan, the high national debt versus GDP, list your items there. It's a common story. But right now, the problem is people think the US is going to hike interest rates and they think Japan is going to hike interest rates at a slower rate. What would make that exchange rate, like keeping it really stupid simple, is if that you had some sort of economic calamity, something problematic that made it so that the Fed decided to actually hold or even begin cutting interest rates. Meanwhile, the Bank of Japan, they like just have to hike rates. Like they're in a situation where they need to hike rates at some point. That is like the only conclusion. The debate is whether or not they should hike quicker or slower, but the idea is a hike. That scenario, the scenario in red, is a scenario where I think the dollar yen meaningfully can trend lower on a sustained basis. But right now, I don't see that scenario as very likely. And I think that the easier case is what's in yellow here. Fed's going to probably hold interest rates or keep them elevated or hike them at a rate that is comparable, if not faster, than Japan. And then you look at the underlying economy, national debt to GDP ratio. And I think that it's a tricky one to try and call the top on dollar yen. I mean, it has been the bane of existence of currency traders for a long time. So you know, as much as it's frustrating, I think that the easier trade here is what you mapped out, where probably we go higher. And then be aware that if it does go lower, if we have something where Fed's cutting rates and everything's changing and the economy's coming apart, yeah, the dollar yen could drop thousands of pips, but I don't think that we're there right now.
Well, it's going to be an interesting window because 2024, this is when it did it. You know, late July to August. It's like that's when the wildness happened. But that was a V bottom.
Yes.
I mean, the Nikkei's had a 20% correction. The Nasdaq had an 11% correction. I guess to me it just feels like those V bottom moves are just, they're not lining up with like a good timing to buy those bottoms, like 9.9% when it's like, well, I think we're gonna have a 15% correction or 20% correction, or this 5 and 3% correction. It's like, you've got to be kidding me, dude. How is this a V bottom at a 3% correction through like July's, you know, post FOMC move?
Yeah, really crazy.
Yeah. Anyway, man. It's funny that I'm sitting here complaining about upside.
Stick, Chris. This is not even, this is like a reverse L shape, not even a V. Because a V is like here to here. We just went straight up hockey stick.
Yeah. It's I mean, like I said, it's first world problems to be like, oh my gosh, what a crazy move. I can't believe the market. It's like, dude, it's up. And it's at all-time highs. It's like, stop complaining. But you know, when you trade every single day in the trenches and you're like, man, I'm getting surprised by here's the math that is a little perplexing. The VIX is at, let's say, 15.5 yesterday and 16. The market went up 2.08%. The VIX at 16 means that even to an extreme, that dealers and liquidity providers are pricing in about a 1% move on the day. So that we go 2%, 2.07% intraday it's so off. It's so inefficient. And it, like, this window has been, I've seen more upside risk days that are so off. And again, it's not a bad thing if all I did is I just bought everything, but like, I trade efficiencies. I trade, you know, I've got ranges every single day and usually the market stays inside of it. But Monday and Tuesday were not those days. So
yeah,
you know, it is what it is. But you lose the battle to win the war, and the portfolio is doing well, but still, you got to just give the market credit for, holy crap. This is where I think the bears just get super pissed, because they look at something like this. You're like, this is not making any sense. It's like, well, I'm not a bear, but I can see how you get mad at the irrationality of like, how is the market moving like this so quickly and to what degree, and what is now like what is the new move, right? Before it was like a ceasefire from 10% lower. What is this? A ceasefire de-escalation from all-time highs, like, and it's still just as good to thrust this much higher.
Yeah, and it's understandable why you here's like a sentiment in the audience, right? This feels like pretty emblematic of a lot of people's thoughts. Like somebody here in the chat says, Nick, it's been 5 months with no deal after how many negotiations? Now what's going to be different this time? Totally fair question, because I don't know, right? Like, I don't know what is different. It doesn't seem like it is all that different from the ones prior. But there's a point where you just look at it and you say, the market seems to just not care about it anymore.
Yep.
The market just is, you know, oil is lower. And I would argue the best case for it is that the White House just does not want the smoke. And them not wanting it may be enough to find a way to get out of it, right? And so like that might simply be what they need to do in order to get the Strait of Hormuz opened up again, is to just concede something. I don't know. That's you know, going to be an interesting take. But again, look at the price of oil. It's putting in lower highs, lower lows. And yes, it can be very frustrating, because you're like, gosh, what's going to be different this time? Well, how many times are we going to hear, you know, deadline is this? If nothing happens, then we're going in. And then it doesn't get passed, the deadline gets moved, and we don't go in. If that keeps happening, the market kind of is like, all right, yeah, we don't believe you anymore, and moves past and looks at tech earnings being monstrous. And so yes, it is very, very frustrating to be like, you know, and here it is, the market just completely ripping off of just a rumor of, you know, this time is for real.
Yep. I guess from my standpoint, for I mean, full transparency, here's what happened yesterday. I got cocky. I was traveling on Monday, came back to the markets, got a little scalping on Monday before the market closed. Yesterday, I'm like, well, we had a blow off day on Monday, and here's a look at it. So blow off day on Monday. And so I came into yesterday's trading, expect a move box. We gapped higher. I'm like, all right, we'll probably, maybe top out around like, let's say 76.65, 76.70 yesterday. Nope, we just blew through it. And dude, all day yesterday, since I kind of called the top here, I was playing defense. So fortunately, defense here landed me a nice big win, but I still lost about $2,100 yesterday net on the day. Now it could have been way worse because I was down about $5,000. So I got a lot of it back. I could certainly survive and trade through that. No big deal. But as I look at today's setup, it's like, okay, are we going to see this? And dude, I've traded thousands of these days, like 0 DT trades. And this doesn't happen consecutively like this. Like getting 2 days in a row is it's pretty much like the extreme or outlier. Over almost 1,000 trades, I've had no more than like two days like this. So does it make me want to get more aggressive on a day like today to just have the market come back into an efficiency zone? Sure. But I also noticed that yesterday's volume was extremely light and it's completely one-sided. And with indexes at all-time highs, it's like the one thing that you should learn is that when things are at all-time highs, you don't really want to short it. Like that momentum, it feeds itself so aggressively. And now with options and futures flows, it just, again, like the rational traders, like, where's the top? Where's the top? It's like, dude, stop trying to play the top. Just let momentum be momentum and enjoy this run. And eventually price will stall and eventually price will roll over and we'll figure out what that looks like. But for right now, this market has little to no interest in making a big, massive pullback at fresh all-time highs.
Yeah, it's true. Fighting the momentum is a tricky trade for sure. So, we'll have to see where it goes from here. I wouldn't be surprised if we do get maybe a little bit of a pullback, but unlike, even though I feel that way, I won't trade it. I think that's kind of what you're pointing out there too, which is, probably due for a little bit of a pullback, but markets can do some crazy, crazy stuff all in consecutive moves like this every once in a while. So we'll have to keep an eye on it. Chris, we're out of time here. I know you got to get running, and we've got our next show host here taking over in just a bit. So thank you very much, man, as always, for coming on and sharing some ideas.
All right, see you soon. Thanks.
See you, Chris. Guys, up next, we have Trader Tom coming on to the show here in just a moment. He is back. He's making his return debut here today. We're going to play a quick break, and then up next, we've got Trader Tom. Stay tuned. If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Hello traders, Trader Tom here from Simply Forex. Hope you're all well. I'm going to take you through some Forex pairs that I'm currently trading. We've closed one trade in profit today, and I'm in a pound New Zealand dollar sell trade as well. So we're going to take a look at those. We're also going to understand this strength in Aussie dollar that we've seen. And it was basically on the back of what the guys were discussing, right? When the indices are flying, Aussie dollar is one currency pair that gains strength. So we're going to look at that as well. We'll also take any of your questions. If you've got any questions, please feel free to drop them in the live chat and I'll take a look. Hi, guys. So let's start with US dollar, Canadian dollar. I was selling this trade and I'm a technical trader, right? And I'm basing this trade on technical. So you can see, guys, we was up here, price didn't know what to do with itself. This is the daily chart and this is always my direction. And as you can see, we kind of built up a little bit and then we broke down. Okay, so we're clearly getting lower lows. And then we had a pullback into this interesting resistance level. What was once support becomes very good resistance. I mean, how many times do we see that in the markets? And that doesn't matter what asset you're trading. That is a very nice setup. And at this level, right, we got a bit of a wick rejection, not a super bearish candle, but a wick rejection. So daily was telling me I can sell it, potentially, you know, all the way down to these lows, but I'm an intraday trader, right? So my time horizon is usually 24 hours, right? I'm out of a trade. But I will let some profits run. So those were the reasons why I was selling US dollar, Canadian dollar. And then if we understand the entry, all I was looking for was price to come up and touch this level, okay, and then get a bearish reaction. And it was actually on the H1 that we got that bearish reaction, right? You can see this candle rejected these highs and I started entering, okay? And that was it, guys. That's how simple this idea was. Daily was telling me I could sell it. It retraced to this last high. We got a bearish reaction. I entered, stop loss up here, took my 1:1, and I'm going to let 20% run, right? We've got some US data coming out later. Obviously, I'll tighten my stop loss to break even and let 20% of this trade loose, for the want of a better word. So US dollar, Canadian dollar sells, and I'm also in pound New Zealand dollar sells right now. Probably not my best entry, if I'm perfectly honest. But again, let's understand why I'm selling. So daily for direction, we are in this downtrend, right? Clearly, you don't need to be Warren Buffett to see that as in a downtrend. Lower highs, right? Lower lows. We are in a downtrend. We also had a bearish candle from yesterday that broke out of this support level through here, right? So we had a continuation of trend is what that is telling me, right? It's breaking an important piece of support. If I go to the left, you can see price has been reacting at this level previously, right? And then all I'm looking for, guys, is a level, right? And on the H4, you can see we had this level mapped out. Again, it's not rocket science, right? What I'm showing you is where price reacted historically. It has a high probability of reacting again at that level. Okay, so you can see price reacted here as support, resistance, resistance, and now we potentially closing back into this level. And what I really like are these sweeps. You can see this high here, okay, and then we've swept back in. Right, still no guarantees that this trade will play out. I'm literally in this trade, but I really like sweeps, and you can appreciate that there's been a lot of liquidity in here, a lot of stop losses. Okay, now on the H4 you can clearly see that, right? We've had a H4 candle close back in, and we're looking to come lower. My entry, not my cleanest entry, to be quite honest with you, right? So this candle here on the H1 come above these highs and close back in, and that was the catalyst for my sell trade. All right, so I started selling here, stops up here, give it a bit of room. Glad I did. Again, once we get 1:1, we're going to take some profit and let some profit run. So we'll see. We're in a live trade right now. Let's see how this one plays out. But I just want you to understand the technical price action logic behind my trades. And I really like that liquidity sweep. This candle here would have been a better candle to enter on, right? Start selling here, put your stop more, well out of the way, and you have less room to move into before you get your 1:1. Okay. So there you go, guys. The other thing, like I say, guys, please leave a question. Happy to analyze any currency pairs that you're looking at. Now, the other thing I wanted to look at is Aussie dollar strength, right? I missed a trade earlier, and we haven't had a big enough retrace on other pairs. And why are we interested in Aussie dollar strength? Because as the guys referred to, the indices are rocket ships, right? you know, we were thinking, right, we've broke this key level. Okay, you know, we're off to the races. It's the end of the world, you know, and then the indices just fly up, right? The whole world wants the indices to fly up, right? So that leads to strength in the Aussie dollar. Okay. Yeah, so if there's strength in the indices, you're going to see strength in the Aussie dollar and to a certain extent the New Zealand dollar, although we're not really seeing that. And then typically we would see weakness in the Japanese yen, but obviously we've had the US and the BOJ intervene with yen pairs. Now everyone's not touching them with a barge pole, right? But we are seeing that Aussie dollar strength. Aussie dollar Swiss franc, I like this for a trade, right? You can see we're in this daily uptrend, and we had this big bullish candle from yesterday break all of these wicks, right? All of these daily wicks. It's a H4 resistance level, but you can see it on the daily, right? And now we've broken, if I take it to the H4, you can see we've broken that H4 resistance. I just wasn't at my charts when this opportunity arose. And then we had this big bullish reaction. If price does make it back down to this low, I'm very much an Aussie dollar Swiss franc buyer, right? Get some bullish candle. I think we've got room to take it back up to here. But we're seeing Aussie dollar strength across the board. Aussie dollar, Canadian dollar. Obviously, we saw that Canadian dollar weakness yesterday on the back of geopolitical news, right? You know, is the Strait of Hormuz open? Is it not? Are there peace talks? Are there not? And obviously oil is just reacting strongly to that. And then as a result, the Canadian dollar is reacting strongly because of the correlation between that commodity and that currency pair. But ultimately, from a technical point of view, Aussie dollar, Canadian dollar has become a buy trade, right? You can see we were pretty much ranging between here and here. And this is what's known in the textbooks as crappy price action, right? Yeah, it's a mess. But once you get a break of that mess, right, we could potentially have a nice trade on our hands. Now, the problem is if we go to the H4, you know, at the very least, I want to see a retrace into this level, right? I want to see our smart river indicator catch up and then we get price retrace into here. Start to see bullish candles. I think we've got a nice buy trade here as well. Again, tread carefully with Canadian dollar pairs, right? You know, and I'm sure the guys have shown you this, but just spot crude, right? It was falling off a cliff. Now, the thing with spot crude is the market wants to fill these gaps, and it's got two gaps here that it hasn't filled, right? So, yeah, you know, will these gaps get filled on oil? That is the big question. Just to show you, this gap here, right? This was the gap that started when the conflict started. Right, the market still made its way back down and filled that gap, and then it shot off. Right, it wants to fill these gaps. The market has a memory of these gaps. All right, guys. So yeah, worth pointing that out with crude. What else are we looking at today? We're potentially looking at a bit of US dollar weakness. Obviously, one was Aussie dollar, US dollar. We had a nice buy trade that we closed yesterday on this pair. But again, you know, if we look at the daily, right, we're kind of in this uptrend. It was ranging a little bit, even had a bit of a breakdown here, but then price just shot off. So we're clearly in an uptrend with Aussie dollar, US dollar. We got a nice bullish candle. And if I zoom out, you can see we've got all of this room to move into. Okay, and generally speaking, guys, if price breaks one level, right, it's going to make it to the next resistance level, right? It's a pretty good rule of thumb. And again, I'm not reinventing the wheel. It's not rocket science. You know, it makes price action sense. Again, it's one thing having a direction on the daily. It's another thing finding an entry. And I don't want to enter up here. You can see this H4 resistance. You can see these top wicks. I want price to at least come back down to this support level through here. So yeah, that's pretty much everything I was looking at. And obviously I was selling US dollar, Canadian dollar as well, which was US dollar weakness. Right, let's have a look at a few people's ideas. I'm seeing a few of the guys from my Discord. So hello, thanks for joining us. Okay, and then we've got, someone says Tom Shelby. Excellent series. Do sound a little bit different. He's from Birmingham. He's meant to have a Brummie accent, which is the worst accent in the world. Sorry, anyone from Birmingham. Right, Tom, can you have a look at New Zealand dollar, US dollar? Yes. So this was also potentially a buy trade for today. Because again, let's start with the daily chart. And you can see we broken these key highs in here, right? We was in this downtrend and then price come back up, tested those highs, and now we've broke those highs. And again, New Zealand US dollar has a lot of free air, right? We like free air. It's worth pointing out we do have some PMI data, for coming out of the US shortly. So if you do like this trade, might be worth holding off for a second. But we like this trade. The thing is, has it retraced enough for me on the daily chart? Now we are seeing a big bullish candle. And if we go to the H4, I wouldn't class this H4 candle as a buying candle, right? And you can see it pausing at these lows. You've also got these lows here. Now, for me to get really excited about this trade, I would want to see a sweep of these lows and even potentially these lows, right? You can imagine the amount of stop losses in here and in here, right? So if we ended up getting a nice big bullish candle that looks something like this, bouncing off of this gray support level, you know, I will be salivating, right? Like literally dribbling. I think that would be an excellent opportunity. And all I'll do, guys, is aim to come back up to the highs and let some profit run. So for me, New Zealand dollar, US dollar, excuse me, is not ready yet. It's not ripe enough, to use a fruit analogy. Whereas if I go to my US dollar, Canadian dollar sell trade, it did take this out, right? It was at that level. We got a bearish reaction. So I preferred this. But one of the guys in our Discord is buying New Zealand dollar, US dollar as well. I want to see New Zealand dollar strength because obviously I'm in this pound New Zealand dollar sell trade. So yeah, let's see how that plays out. I mean, every time you talk about the US dollar, guys, we've got to have a look at the dollar index. And it's all about this 100 level for me. Okay, let me have a quick drink while I'm at it. Thirsty work, this. So it's all about this 100 level. And it's, you know, we thought it was pushing off the 100 level. Okay, and then we've had this massive drop. Now, if I show you the weekly chart, let's start with the weekly chart. We have closed back below this 100 level. But, you know, as you can see with our smart river, okay, it's still in an uptrend. Okay, we're still ultimately in this uptrend, right? We're getting higher lows, higher highs. All right, so weekly we're in an uptrend, but it's fell below this 100 level. And on the daily, it's breaking down. So you would think short term for the next few days, further US dollar weakness, right? It might want to come back up and test this level, and then we see a drop to the next piece of support, right? So yeah, but ultimately, it's if we're above this 100 level, right, we're bullish. If we're below it, we're bearish pretty much, and we're going to let trend and structure dictate what we do with it. And obviously, we don't trade the dollar index; we trade the US majors. But yeah, US dollar strength and US dollar weakness is what we're seeing. Yeah, just by looking at the charts, right? So yeah, there's my New Zealand dollar, US dollar. Okay, what else do we want to look at? Just look at some of the other questions. So Tom, what is the indicator you're using? This is our bespoke in-house indicator, guys. It's called the Smart River. Tracks price action and changes color with trend. So yeah, come check it out. Tom, gold. So we've got people wanting to look at gold, and we've got the US dollar against the South African rand, I believe that is. Let's start with gold, right? Now, let's do a top-down approach because this is how I roll. Now, this last low here, gold is hanging on to with its fingernails, right? It is. It's not been broken because of all of the wicks that keep closing back inside, right? We've not once had a clean break of that level, right? Look at all these wicks just keep closing back inside. There's no clean break of that level, right? And this is really the last significant swing point, right, on the weekly. And price is a mess around this level. And you get this a lot when you have basically a downtrend, but you reach an important area of support or last swing point, right? And then price doesn't know what to do with itself because you've got these trend following sellers and you've got these traders that are buying this level. And what that results in, if we go to the daily, is a mess. And that's what you're seeing. But, you know, we basically haven't really moved between here and here, right? We thought we were getting a breakout. It comes back down. You know, is this another false breakout that we're seeing now, right? And it'll be interesting to see how gold finishes today. Now, really, because this, again, this is the last interesting swing point to me. I'd even include that high as well, right? Because these are only the reference points we have. If this candle breaks these highs, right, that is quite an important level to break. And I will be looking for a pullback, and then we potentially come to the next area of resistance, right, which is this level here. So really interesting gold right now. It'll be really interesting to see what this daily candle does. Will it break these highs here, or will we have a bit of a wick rejection and it closed back in and we're still back into this choppy crap, for the want of a better word? So yeah, I need gold to give me a clear direction before I would consider buying or selling it. So yeah, buys above this level through here, and then the alternative would be if we broke out of this level, right? So I will wait to let the market tell me. Right, what else did we want to look at? Okay, so US dollar against the South African rand. Let's take a look at that. Now, this was really much a buy trade the other day. But let's take a look now. Yeah, okay, so it's broken that trend line there that we put in. But let's again start with the weekly. And it's a buy trade, right? Still, on the weekly. Okay, you can see we've had just price contracting. Yeah, it never broke these lows. and we're getting this. It's basically a descending triangle, right? I'm not one for chart patterns. It's basically a structure break, but that is a descending triangle. And then we've had this big bullish candle break out of that. And you would think there's a high probability we can take price back up to this level. That is what the weekly would tell me. And this candle wouldn't put me off of that idea, right? Because it's an inside candle. But the daily chart that we quickly glimpsed at is not filling me with confidence to buy. But, right, there is, you can see here, this is the last swing point on the daily. So like with gold, funnily enough, we're looking at pairs that are at really interesting levels, okay? And that level right there, in fact, let's just put it in, right? That is the last swing point on the daily. If we hold on to that and we start seeing bullish candles bounce off this level, then I still think we've got potentially a buy trade. I would only take buys to here, right, which is still plenty of pips to make money, and then see how it reacts here. If not, let some profits run. But I cannot unsee this trend line. So yeah, back up at that trend line would be a pretty good first target. All right, but yeah, weekly it's a buy trade. Daily we're still in an uptrend. Nothing's telling me to buy as yet. But if we start seeing buyers at this level and this low holds, then yeah, we can take some buy trades from here. If we break this low, right, let's say today's candle finishes like this, right, and it's red, right, then no, we've had a structure break and we're now in a downtrend. Chances are it will make its way back down to these lows. So yeah, at an interesting level as well. All right, guys, what else do we want to look at? Okay, so lots of people talking about US dollar equities. Let's have a look. I mean, let's have a look at the Nasdaq. Right, and as you can see, guys, right, they're flying. Okay, and I don't trade the indices, right? But obviously I keep a keen eye on the indices because they heavily impact all currency pairs pretty much, right? They all have a knock-on effect. Everything's correlated. But, you know, do I want to start buying up here, right? No, right? I want to trade from potential value. So indices here would be a pretty good buying opportunity for me right here, okay, with a view to taking price back up to these daily highs. That would be the technical trade that I would be interested in. But with indices, with geopolitics, price could just do that and come up and hit these highs. And if it does, I'm not interested, right? There's no value in it for me. If it pulls back to here, there's value. Some of you guys are mentioning the H4 again, right? You need that pullback into value, right? You can see there's a level through there, right, which was that daily level. This 29,200 level will be a nice place to trade from. But will it pull back? I don't know. I don't have a crystal ball, but that's what I would want to see to trade it. What else are we looking at? What's your view on US dollar yen? So yen pairs are just freaky. They're just mental, right? But an interesting point here. I've got a couple more minutes left, guys. And guys, if you are enjoying my analysis and my technical trades, then please come join Simply Forex. I'm sure the guys will put the link up. In fact, I can see it. So go check it out. Now, when you have these mental moves, right, and we all know why, this was US dollar, the US and the BOJ combining it for yen intervention, right? And Trump took all the praise for it. It was like, yeah, I'll help Japan out. We'll, you know, make their currency stronger. Such a modest guy. But when you have these big moves, scroll out, right? Because you can't make sense of it here, right? You know, just that move is too extreme. Whereas if I just go up, and that's the daily, if we go up one more and we look at the weekly, right, it's less extreme, right? We're in an uptrend, higher lows, higher highs. We're back at these lows and we're getting a bullish reaction, right? We've got a couple more days, obviously, before this weekly candle finishes. But if I see a nice big bullish candle like that on this weekly chart, I'm buying it, right? Now, obviously, sort of the day chart is king for me. So what I would need to see is some kind of price action to tell me to do that. Maybe price pauses at this level a little bit and then we get a breakthrough. Then I'm interested, right? I've got more confluence to support my buy trade. If price action, you know, I don't know, but if price action played out like this, that would just be another piece of confluence for me to potentially buy. And that's what I'll be looking for. All right, guys. So, yeah, hope you've enjoyed the analysis. If you have, come join my channel, Simply Forex. And I will see you next week.
Don't go anywhere, traders. The show will be right back with our next show host. But before we get back to the show, I wanted to mention today's live stream sponsor, Ola Prime. Ola Prime is one of the fastest growing prop firms that I've seen in the space, and they offer a super wide range of different account types. Whether you trade Forex or futures, whether you're a swing trader or you're a day trader, they have multiple different account types, and they have some of the most competitive pricing that I've seen in the industry. And check out this publication from Deloitte, who did an audit during a select period of time on Ola Prime and its payout legitimacy. One of the big things that Ola Prime is well known for is their very fast payouts. They have this posted up all over their website as one of their main reasons that traders like them. From what we've seen, they also have a very strong reputation overall within the trading space, and they are a proud sponsor of our everyday trading stream here. And for a limited time, if you use our promo code that you can see on the screen right now, A1 Trading, you can get 20% off any of their accounts. And using our discount code lowers the barrier to entry, meaning that your challenge costs you less and gets you that much closer to potentially getting a payout someday. Of course, to throw my 2 cents in there, I'm a big fan of not trying to get funded until you feel you are actually ready to do so. So if you feel you have the skills, if you feel that your trading is up to par, and you do your due diligence on Ola Prime to see if it's right for you, then make sure use our promo code to get that extra discount at checkout, and we'll be dropping the link to them down below in the live stream chat. You can also find it in the description, and we'll have a QR code on the screen right now that you can scan if that's easier for you as well. So thank you to Ola Prime for sponsoring today's live stream. Now back to the next show.
Good morning, everyone. How you guys doing? Good to be back here. That was a mouthful. I don't know why I tripped up there. Gotta reply to this message here. Awesome. Okay, good to be back, guys. Gold is back up 3%, so back up to that level of resistance there that I'm watching here very, very closely. The most slightest pullback ever, and a continuation higher here. So we have some momentum that I'm looking at. So I am looking for the breakout here in gold for me to go ahead and trail stops. We'll see what happens. But also, it would be very likely that price stalls out here ahead of NFP, or shortly going into NFP. So this is the line right here that I'm looking at, 4,200 here. We're all looking at it. We've been watching it here this morning. So that's what I'm looking at for DXY. Start to see a little bit more softness get into the picture here. You're seeing dollar yen, interestingly enough, here rejecting that 200-day moving average there. So I love to see that for a continuation to the downside. I'm looking like anywhere right here. So where this red line is, like 156, 155, anywhere right here. I'm looking to see what price does, so I can go ahead and see if there's a reaction that could prompt me to go to the upside. But again, you guys know that I'm looking to buy the dip on this for sure. It's just a matter of where. But that's the big question here on my mind. But we are below that 200-day moving average. So for now, the technicals are kind of leaning towards the bear side on dollar yen. As for dollar Swiss here, again, possible short opportunity. I actually really like that. I don't want to jump the gun ahead of NFP though, but again, if you do have a weakening NFP coming out, I would really like to participate in dollar Swiss to this downside. Like when it starts moving to the downside, it really starts to move. So I'll be looking to try and catch that. And then that first level, if I were to go on dollar Swiss to the short side, would be 0.793-ish, right where this 200-day moving average is. You can't really see it, but if I move this right here, you can see it right there hanging out right where that level of support is at. So dollar Swiss also looks really, really good on the edge finder. So if I go to the top setups page and if I scroll all the way to the bottom for the bearish reads, you can see that it's getting a very bearish reading of -7. So I love to see that. So dollar Swiss looks really, really good. For dollar CAD, slow grind lower. I would expect that if you do see some continued dollar bearish fundamentals, that you can see a drift lower up to 1.395. I like that level. And the 200-day moving average is slowly creeping up there. So if you guys remember, this was my like original OG pullback level, 1.395, 1.39-ish area. So if we do get there, I would be happy to start looking for a potential longer term, medium to longer term kind of outlook on bullish dollar if it makes sense. And then that would be a level where I would look to act on. But for now, I'm bearish on the dollar, not super bearish, but I am bearish on the dollar, and I do expect a little bit of a slow drift lower there across the board. When it comes to my euro dollar position, doing quite well there. We had a pullback 2 days ago, and yesterday we started the momentum back to the upside, so we're kind of back to there. Again, I'm targeting that 200-day moving average. I might as well. Let me. I might have to do this here. So I'm gonna just trail my stop, kind of like shy right here, I guess, somewhere like over here. Yeah, I'm just gonna move it to break even there on euro dollar. Again, take profit right over here. So 1.162-ish area. That's where I'm looking to be at. For gold, don't want to trail my stop too closely yet. We still have to overcome this. So this is what I'm looking at. All right, this is the level of resistance right here. And then a potential pullback, if it were to happen, would be somewhere around here, 41.20. So pullback here. So I guess I could. Here, I'll do that. I'm going to move this to break even. And then if we do get the pullback into this level and it holds, then I move it higher into profit, so on and so forth. And if you break the 4,200, you get a break and retest of the 4,200, then I will trail it even more, so on and so forth. So for right now, all trades are risk-free right now. Nothing's on the line. So we'll just let them do their thing, right? Don't want to do anything too crazy. Just let them do their thing. Wait for NFP on Friday. If the fundamentals continue to go in our favor, then I will look for other positions and I'll do that. I can probably express my viewpoint through maybe like a pound dollar long, or like I mentioned, dollar Swiss to the short side. I really like that. You got that same TP point on euro dollar. It's a pretty solid level, I would say. Like this is right here, like this will support here, turned resistance. So we had support right there, break lower, pull back into this level. This was resistance here. And so I would imagine that if you were going to revisit up to here, that you would have some kind of friction point where price can stall out at. And so, whether it breaks meaningfully higher from there or not, I don't know, but I just know that, or I could imagine that there would be some kind of friction here where you have this level of resistance, and also not to mention you have the 200-day moving average hanging out right there as well. So that's what I'm looking for euro dollar. We'll see what happens there. If for some reason it just blows past this level and continues higher, then hopefully I am able to kind of navigate that in real time and let this thing trail higher. If not, then I'll just look for a re-entry on any pullbacks, right? If the fundamental picture is starting to shift from like this hawkish dollar to meaningfully change to the other direction, then you can buy high and sell even higher. So that's what I'm looking for euro dollar. Yields are higher today though. The 2 years up there, 30s flat, the 10s up. Anything new on the kind of the Middle East stuff? Let's see. Oil still at the 200-day. Financial juice. Japanese yen intervention drops caps in year 153 according to TD. Where's 153? What does that look like? 153 is over here. Yeah, I kind of agree with that too, actually. This would be like that really solid level support. And then if you break that one, then you really have open air all the way to like 142, 140. But I could agree with that. 153-ish by TD. Yeah, it makes sense. I'll read that later. Let's see what else we got here. Israel launched strikes in southern Lebanon in response to that, so I'm sure that's going to disrupt some things. Again, guys, it's so back and forth. It is so back and forth that you really don't know what it's going to be. Like, and I think the market is in agreement with, like, you know what, the Middle East war, it is what it is. I mean, look at the stock market, ripping higher, right? The market right now is pricing in no war. There is no war in the eyes of the stock market. Like, this is just purely pure optimism right here, right? Like, you didn't even get to pull back into the 200-day. Like 7,300 there was a solid level there. Now the Nasdaq, different story. Nasdaq, you did break this 28.4 level, but again, you didn't even get to the 200. You found buyers immediately in between that. Same thing with S&P. It is pure optimism there in the stock market. So that's tricky. It's hard to navigate that. I wouldn't buy it, although it's really, really strong. I'm just kind of, I guess, focused on other things now. I'm more focused on the currency side of things, the metal side of things, maybe the oil side of things. If you get another flare up, something crazy hit the fan, then maybe I could look for kind of oil long opportunities. But yeah, that's pretty much it. Bitcoin too, something that I'm looking to actively short if we were to get to that 200-day moving average. So really quiet there in Bitcoin. So do I get there? Do we get to 71,000-ish? Don't know, but my alert's right there, ready to act in the event that we do find our way up there. I would imagine, though, if you, I'm kind of bearish on Bitcoin, so if you were to see a revisit to that 200-day moving average, I would imagine similar to this time right here, where you have a bearish reaction and take it to the downside. But Bitcoin has been very, very slow, so it's been very bad for crypto. I know the crypto guys are out there hurting right now, so that's kind of where I'm at right now. You shorted again Bitcoin. So here's my dilemma. I'm a swing trader. So for me, like, swing trading this would be difficult. I don't know if Bitcoin is one of those assets that you're actively day trading in. And if that's the case, I obviously have no experience doing that, right? So I would rather wait for my approach, which is just the swing trade opportunity. So if you were to find yourself at that 200-day moving average, at that point I would act. But as far as, like, navigating this market here, I really don't know, and I don't want to hop into something where I lack experience. And so I'm going to continue with my approach there. And if for some reason we get to that 200-day, then at that point I act. And if not, if I never get there, then so be it. It's fine, right? It would have been a cherry on top anyway. Not if you trade altcoins. Altcoins, from my understanding, are super volatile, like super volatile. But yeah, I mean, maybe you can enlighten me, Andre. Maybe you can enlighten me. A new just hits. A new news feed, Max. Is that what we're talking about? Let's see. Are we talking precious metal or S&P? S&P maybe? New all-time highs? Funny story. A guy in the washroom heard me playing the stream and said you trade, and he was telling me about his golden strategy. I told him, cool story. Wash your hands. Oh, man. I wonder what the strategy was, ball out. I wonder what the strategy was. Was he talking about liquidity sweeps or gaps? It's a hit or miss when you tell people, like, what you do for a living in this thing, because it's either like, if I give you $1,000, could you retire me in 2 weeks? It's like, dude, if that was the case, I would not be here. I would be living in an island or something. Like, if I could do it for you, wouldn't you think I would do it for myself? That, or like if they have some exposure to trading, it's like, you know, they're thinking it's, and nothing against it, right? If it works, it works. But it's like they're either like the ICT SMC type of crowd, and then from there, I'm just a little bit hesitant and they're skeptical a little bit. Inverted head and shoulders, probably okay. So it seems like you didn't have the conversation. You didn't open the door to kind of uncover the strategy there. Max, I never say that here in France. People look at you when you play with money. Yeah. Yeah, it's I'm curious, what do you guys say? I'm gonna ask Marco. I'm very curious to know like what you guys approach are. But yeah, it's usually a mixed review. Sluggy says, just tell him that you're a gambler. I usually just say what it is, but then I always have to like do more further explaining. Like if you were to tell someone something else, there's really no explaining to do. Like if you just say I'm in roofing, like okay, cool, roofing, that's it. You know, kind of move on from there. But for some reason, when you say it's trading related, it like opens the door for a lot of things. Sluggy says you're a professional gambler. Waiting for Marco to teleport. Marco will teleport in here when it's time. Max says, good to have another job to showcase. That is also very good. Yeah, for sure. See, we have another French guy here in the chat. So Simo says, I click buttons for a living. Okay. All right. So let's see. Pretty quiet now. As the day is kind of developing here, it's been a little bit quiet. Let me see. I'm gonna do this here before Marco joins on. Oh, Marco's here. It's fine. I'm just gonna drop the link here to the Telegram channel. Go ahead and join, guys. Completely free. Take advantage of it. Markups, analysis, bonus content, discounts, all that good stuff. It is fantastic. How did you feel when you made your first 1K? It felt pretty cool, man. It felt pretty cool. I was like, wow, you can actually I withdrew it immediately when I made my first profit. It wasn't 1,000. It was way less, but I just withdrew it and I was like, all right, I had a deposit into my bank account. It's pretty neat. And then from there it was there on. But Marco, how you doing, man?
Hello, Alan. I'm doing well. What about you?
Pretty good. Simo's over here saying, Marco, you teleported from the metaverse. How was it in the metaverse?
Well, the metaverse is canceled, so I think isn't it canceled? Like the big project from
actually, yeah, I think they realized like 80 billion to a couple $100 billion worth losses after so many years. They finally cut it off.
Yep. So the lizard lost a lot of billions, but he's still super rich. So yeah.
It's only a dent, man. It's only a little dent. We're talking here, Marco. This is it's not entirely off topic, but like, what do you say when people ask, like, what do you do? Because I feel like, so Ballout had an experience. For context, Ballout had an experience. He was like in the restroom or something. Someone was, I guess so Ballout was actually, let's walk this through, right? Ballout was in the restroom. And he had his phone on speaker to the live stream. So Ballout is committed, right? So before we go any further, we need to acknowledge that Ballout is committed. He was in the restroom with the phone on speaker, listening to the live stream.
Yeah.
And
someone doing a number two, I'm guessing.
Maybe number. I mean, I don't know, right? I don't want to. That's for Ballout to say. But 2, 3, who knows? But he was there on speakerphone. Someone overheard the live stream, and then asked them, like, are you trade or whatever. And I say, from my experience, like usually when you say like you trade or whatever, it's one or two things. Like they ask you to take their money and quadruple it or whatever, or it's like they're like, well, really, like, or what? So like, what do you say, Marco?
Well, first of all, that's a pretty funny situation. It would be pretty funny if I was like in a bathroom stall and heard the guy next to me listening to the A1 stream. But second, it depends on the country. In Croatia, they think you're a scammer most of the time.
Really?
Because like trading and investing is not popular at all in Croatia. most of the investing is done by pension funds, and the pension funds, they just buy, I don't know, they may buy some bonds, maybe a little bit of S&P. That's about it. So when you say trading, they immediately associate you with the scammers, because there is a bunch of scammers. So there's very little traders, but as far as scammers go, there's a huge amount of them, because like Forex is super easy to scam people in. You don't need to make any money, no payout proof. You just buy a bunch of challenges, you blow 50%, you make some money on the payouts, and you can start a community basically. So it's kind of the easiest way to fake.
Okay, interesting. So in that side, in Croatia, it's the scammer stigma. I think in the US,
Yep.
or kind of like where I'm at, it's more so like the unrealistic kind of expectation of it. And so you have to like
Yep.
kind of like bring them back to reality. It's like it's not like this like holy grail type of endeavor where you just multiply your money in the short period of time. Like I feel like that's the stigma, that's the expectation is like, oh, you can just flip money very, very in a short amount of time and super huge and whatever. Like, let me give you $1,000 and you and tomorrow you'll retire me. It's like, it doesn't work like that. So
Yeah.
okay, just interested. Yeah.
And also, usually when I hang out with my friends from high school, they usually, like, the opening line is, "How many people did you scam today?" So it's super unpopular in Croatia because of the scammers, of course. But I'm guessing in the States and maybe like the UK, people kind of understand what we do, and they get a grasp on it. So it really depends on the country.
Yeah, for sure, man. Well, what are you looking at today, man? It's we had ADP non-farm came in weaker than expected. It came in the 40s, and it was expected to be like 68 or 65, I think, which supposed to somewhat mimic NFP, right? So
Yep.
if you want to
Yep.
take that and
Yep.
run with it, you could assume or say that with a better probability that NFP may come in weak, may not. Again, no one knows, but the reaction to that was somewhat muted on the dollar, though on gold may be seeing a combination of like oil prices still staying somewhat subdued there, and then softer dollar. I mean, silver's up 4%, gold's up almost 3% at one point. Anything that you're looking at here, or are you going to kind of stay put going into NFP and wait for after the fact? Or you still, I believe you wanted to even maybe accumulate some dollars, right, going into the event?
So the dollar is tricky. The dollar is tricky. I know I mentioned it yesterday, but as a professional trader, you need to have a view on the dollar, because whatever you're trading, it is connected with US dollars. The tricky part for me is that I'm expecting a stronger NFP. I'm expecting a hotter CPI. So the logical trade would be to buy dollars, but you have a looming intervention, which is very bearish for the dollar. You have a dovish Fed, which is absolutely bearish for the US dollar because they are very hesitant to hike rates, even with high inflation. So like the strait can keep being closed, inflation can keep on running up, but the Fed, they probably won't hike rates, which again makes the dollar look pretty weak. And you're getting the uncertainty around the Middle East, where it's war on, war off, strait is open, strait is closed. We don't know what the hell is happening. That's what's giving me conflicting signals, and that's what's telling me to be more patient, to be more neutral. Maybe wait the NFP print, maybe wait the end of the week to see if the strait actually opens up, because the markets are pricing in an opening of the strait. Do you agree with that?
I mean, that's what the price is telling us, and today would be the day. So Besant said yesterday it would have been either yesterday or today is when you would have that announcement. And I think we saw some commentary too from the president as well, saying similar type of situation, like something will come out. I must have missed this year. ISM services PMI came in better than expected, so that's going to be good for the dollar growth source. That's probably why you're seeing a pretty flat dollar. But to go back to what I was saying, yeah, the expectation is for today to have some kind of positive development that's new that would hint at the war coming to an end. Do I think that's going to happen? we still have some hours to the day. The day's not finished, but I say probably not. And so if you do have a lack of kind of commitment to the ends, I would wonder, and I would like to see kind of the sensitivity to oil prices. Do they completely reprice this whole leg lower, right? Because that was the whole expectation. Does it stay there or not? If it stays there, it would be really interesting, because that would mean that the market really does not care at all what they're saying.
Yep.
And they're driving on something else. So I would really like to know what's that other underlying factor that they're, pricing in this lower oil price. But that's kind of my thought process. So today to me is kind of like what I'm looking out for. After today, tomorrow, really nothing really on the docket. You have unemployment claims, which could move the market, could not. But the big one would be Friday. So unless anything happens today, I would imagine moving forward until Friday is going to be pretty quiet, nothing much to do.
Are you still in the euro dollar?
Yeah, so I
Okay,
as of today, I moved my profit to break even on euro dollar and gold as well. So gold's doing well today. I'm looking for that 4,200 break. So on the 4-hour chart, looking to get a break here, retest, and continue higher, and then I would trail my stop even further. If you do have this level of resistance hold quite nicely, I would expect a pullback deep as far as 4120, which is this level right here. So it's kind of what I'm looking for. But right now, the stop loss is also trailed into break even, so there's really no risk on the table.
I'm sure the current viewers love your gold position, because I noticed that when I make gold content that is bearish, it does worse compared to gold content that is bullish. So like that tells me that a lot of people are bullish as well. So this is a pretty popular position. Now that could be bad, it could be good. Personally, as far as gold goes, I think it's stuck in a range below the 200 EMA and above the 4K level. But it seems like the dovish Fed is really starting to push gold to the upside, and gold is starting to respect the correlation with risk on, with the SPY, with the Qs, which is a good sign. It's a bullish sign for gold, absolutely. I'm a bit hesitant to do anything in this area. I already did have an attempt to buy, which didn't work. So I'm staying on the sidelines for now when it comes to the metals.
Yeah, and to your point, like there's gosh, you can't say it. The message is better received when you're gold to the upside rather than gold to the bear side. And so I think that you also probably have just a lot of kind of anticipation and probably cash on the sidelines parked, ready for that gold momentum to start kind of piling in there. So yeah, it's doing quite well. To answer Mass's question, yeah, this is on the FTMO account. So, excuse me, that's what it is, and I'll be patiently waiting for a break it in either direction. Let's see, silver, different story. It's really moving up there. Is that something that you're looking to play? I think you're more open to trading silver. Me personally, I just don't. But silver, is that something that you're maybe looking to participate in? It's been kind of in this grind lower here, potentially breaking this wedge. Is that something that you're looking at, or not really?
Well, when it comes to silver, I'm looking at it, and I have the same opinion. I think it's stuck in a range. I would be happy to trade silver. It's either silver or gold. I don't care. But yeah, it seems to be stuck in the range as well. It seems to be following gold in that regard, which, of course, there's a massive correlation. So I'm not convinced. Can gold go up? Yes. Can it go to all-time highs? I don't think so. I think the hype is not there. I think the retail interest is not there. I think the retail actually got burned by the end of 2025. Not just on gold. I'm talking about SpaceX. I'm talking about the semiconductors. I'm talking about the Korean stock market. So there has been a lot of bubbles lately. And there comes a point in time where the retail just says, I'll go and Uber or something. Trading is not for me. I'll go and drive a taxi cab, and then maybe they come back like 4 or 5 years later, and we have another cycle. You know what I mean? So usually when the retail loses money, it stings, and that feeling tends to last for a while before, of course, people forget, and then we get another cycle. So that's how I'm seeing the current gold situation. Bitcoin is not reacting much, which is a warning sign. So gold is starting to move up and follow the SPY. Bitcoin, not so much. That's a big warning sign. That is not what you want to see if you're a bull on Bitcoin.
Yeah, for gold too here, I'm also not reaching for the stars. Like, I think all the way back to all-time highs is a very big stretch, a big ask,
Yeah.
especially considering that this was driven by, like, remember this, there was no war going on. It was just straight up dovish. How many rate cuts? That story, right? So like, we are way far away from that. We are barely coming out of. I mean, we're still technically in a restrictive stance. You still have the possibility of going in the rate hike direction if you do have, for example, a super strong NFP report or whatever, and inflation starts to run away, like you mentioned. If CPI comes in hot, that could very still be the case. Like, we are still on that side of the spectrum. So for me to, have the expectation of like all-time high in gold, completely wrong. I think that if you were to break 4,200, the next hurdle would be 45, right? And at that point, it's like you still have the longer term bear play still intact. Like, if you were to reject 200-day right here and continue lower, then this was just a small little pullback into a bigger downtrend if the fundamentals and the macro kind of shifts that way, like hawkishness. Yeah, that's kind of what I'm looking for. So 4,500 is kind of where I'm looking at. Anything above that would be a cherry on top. If you somehow break the 200, break retest, and continue higher, I would imagine you have some sort of firm overness, like the war's over completely, and you have kind of now the question back in mind of like, how many rate cuts are we getting now?
Yeah. And you would probably make some really good percentage if we went to the 200 EMA, like on gold. So you don't even need to hit a home run. You're doing FTMO. This is phase one, right?
Yeah.
So even if it goes just to the 200 EMA, you'll be pretty close to probably passing the phase one. So you're kind of set in that regard, I would say. It's pretty good.
And I'll say that with this, like when gold starts to move here, like if you were to break here, retest, I would probably add my position size, like add a little bit of size to it. Yep. And then just slowly increasing, moving my cost basis up a little bit. But as long as the cost basis stays below the current market structure. What I mean by that is like, let's say like you have something like this. And let's say like right now, my cost basis is right here. I'm going to make this yellow. So for everyone watching, this is how you can like very like conservatively and like be mindful of what's going on here when it comes to like open risk and stuff like that. So let's say I'm looking for a break and retest of this level. And so prices above here, I would add enough position to only reduce my cost basis closer to here below the structure. If you add too much size, then you have kind of cost basis going to either here or above, and that puts you at risk because any pullback that's still in line with an upward trend, but any pullback that gets you here could take you out for break even, and then you just erase all of your gains. So reducing cost basis as market structure is moving higher, but staying below and not adding too much size to where like you can still be chasing structure, technically speaking. So yeah, that's what I would approach with gold. But yeah, 4,500. It's a pretty good ways away. I'd be, I think, at or pretty close to just passing the first stage. But with this account, Marco, similar to my life, like I want to treat this responsibly. I don't want to like shoot for the moon, like Max was saying here in the chat. I caught that, but like going for a one trade pass, not really. Like I have other things running. Like I have Eurodollar too. Where's that at? Which is probably going to be like $1,000 when it hits take profit, if it does. So it's pretty well diversified. It's trading like any other account.
Yeah, my previous strategy, which involved 6 currency pairs, was super high reward to risk, but a win rate of 20%. So most of my fund accounts were passed in one trade. So that was kind of interesting to note. And then, so I passed in one trade, and then I just traded minimum lots to pass the minimum trading days. So there's many different ways to do it, and it was like to catch that one huge winner with a 20% win rate. It was tough. Let me tell you, it was tough. But once you caught one, it was a good day. So yeah. What's your take on the SPY? I know you have to go, but maybe we can finish up with that.
Yeah, man. I mean, this is the market. The market right now says there's no war. Like looking at this chart here, If you were to ask someone like, "Hey, you know, what's going on with this chart?" They'd be like, "Oh, wow, you must have great earnings and no geopolitical conflict and everything is dandy and the Fed must be cutting rates aggressively." But that's not the case.
Yep.
You actually have a restrictive Fed, you have a geopolitical war, and you're seeing some volatility there as far as earnings go. So the market is just very optimistic. Would I participate in this? Absolutely not. Like, it's as sucks as it is to kind of see this thing run, because I was looking at maybe like that 200-day moving average. We never got to it. Like, I remember looking at 7,200, 7,300 and being like, you know, if you break this level, you get a flush lower to maybe the 200 or beyond. Nothing. I mean, even Nasdaq, you got the flush, but then you didn't tap into the 200-day. So I would have never entered that market, right? Like, I wanted a touch of the 200-day. So it's just very annoying. I think it's just like, it's just going to likely keep going higher, grinding higher. I would imagine that it just even continues if today you do see a end to the war. That would probably even fuel this thing even more. And with that, I'm not going to be chasing price, because you're buying literally at the top of the market. Like, you're buying at the top of the market, and you're assuming that it can go even higher from that. So not something that I'm looking to participate in. But how about you? Like, I'm sure this is creating some pretty nice breakout opportunities on single stocks. Am I correct?
It is. So stocks are starting to shape up. Let me put up my screen here. What is interesting that SMH, which has been the leader, is no longer kind of leading this SPY move to the upside. SMH has just climbed above the 50, but it still looks pretty bad. So the SPY is, I don't know exactly what's pushing it up, but it's not the semiconductors. I did manage to catch one breakout so far. It's on HPE. And I'm looking to add some more breakouts, although this is just the start. So this could still be a fake out. I would say once you get a breakout like this one, you need to wait a couple of days, maybe a couple of days for the markets to calm down, for your stocks to start shaping up, and then you get lift off. Then you get a real explosion on the individual stock side. So great sign, really bullish sign. Can we continue? That is going to be the question. I think we can. I think the market was waiting for a dovish Fed. We got it, and that's going to be the next leg up.
Awesome. Well, before I head out, Marco, I just saw this here. I'm seeing like a little bit of like kind of follow through when it comes to like dollar downside. Like, I'm looking at like USD CHF kind of moving lower, dollar yen moving a little bit lower, dollar CAD too. And I'm like, what's going on here? Like, gold here up 3.4 now.
Oh, nice.
US removes Iran related sanctions. So maybe that's kind of moving in that direction where
that should be in the red, shouldn't it?
It should. We'll see. Maybe it's too early. It was 3 minutes ago. No, it should have been already red now. But we'll see, man. We'll see how the day develops. I'll go ahead and leave you to it, man, to your portion of the segment. Thank you. And I'm excited. I'm excited for NFP, man. I'm either going to get stopped out for nothing. I'm a break even trade, or it's going to continue. But nonetheless, it should be fun.
Should be fun. Well, thank you, Alan. I'm looking forward to talking with you tomorrow. And good luck with gold. Looks pretty good.
All right, man. Take it easy. Bye-bye.
Yep. See you. Bye. So let's continue with my segment. Let me add my screen to the stage. Okay. Let me just do one host. Let's go to banners. No media assets. All a prime. Okay. PMI came in a bit negative. Neutral. I'm going through the comments. I passed a couple of accounts with 1 to 3 trades and they never said anything. Maybe they can see that I'm not a profitable trader because of my trading behavior, hence why I don't care. Just be careful, FTMO doesn't like such way to pass accounts. I don't know, lately I haven't had issues with that, but I know there's definitely issues on the funded stage. So on the funded stage, they do really monitor what you're doing and how you're trading. So that could be pretty tricky. Plus, my strategy has changed. So now It takes me a couple of trades to pass. The risk to reward is smaller, the win rate is higher, so it makes the equity curve a lot more stable, which is better for prop firms, absolutely. Robohola says, I can confirm what Marco said about trading in the Balkans. It's maybe because the mentality is more negative. Yeah, absolutely, it is. And because there's less people that are actually trading, so it's people are, let's say, not acquainted with it. Ballout committed, he definitely is on vacation in France. Health insurance to professional gamblers. Thoughts on pound Aussie? What are your thoughts on the yen? They really care a lot about the funded stage. They do. Yeah, they do. Gold breakout. It's starting to break out. It looks pretty good. It looks pretty bullish right there. So congrats to anyone betting on a breakout. It's a big one. Yeah. I'm guessing the dovish Fed helped a lot. The dovish Fed seems to be so the dovish Fed seems to be pushing gold to the upside a lot, and I like this. I like that gold is following stocks. One thing I would like to see as well is Bitcoin to start and follow. Bitcoin is pretty flat on the day, pretty flat lately as well. So isn't this the guy who called bearish on gold for weeks? Well, it is me, but the key was to get a breakdown of the 4K level, which we didn't get. So I was only going to turn bearish and actually sell if we broke the 4K level. Plus, as far as my predictions go, my win rate is below 50, or it's around 45 to 50%. So half of my predictions will be wrong. Traders, let me open up that topic a bit. Traders are kind of bad at predictions. They're pretty good at maximizing the winners and minimizing the losses. But as far as predictions go, if your win rate is 20, 30, 40%, you ain't really good at predicting. But you don't need to be. To make money, you just need to have an edge, and you need to keep the winners big and the losses small. So we're not in the game of poly market. We're not in the game of prediction. We're in the game of trading. Do you use TP or trailing stop loss for your swing trading? In some cases, yes. In some cases, no. It depends. It depends. It depends if the asset has a positive skew. Okay, if the asset has a positive skew, meaning if it's going up over time, like this, then I'll be happy to use a trailing stop loss. If the asset is like a currency pair, which usually mean reverts, so it trades around the mean is here, then usually the better way to go is using a stop loss and a take profit, a fixed stop loss and a take profit. So it depends on the asset, it depends on the time frame, depends on how many days do I plan on holding the position. Now, what do I want to do? Yen. Yes, the only position that I'm currently running, well, the only position on Forex, I am running a trade on HP as far as stocks go. On Swiss yen, I am running a short. I've closed 60% already. I have 30% left. I'm holding it through. I think the yen appreciates over time. You have a lot of catalysts on one side of the equation. You have intervention, a hawkish Bank of Japan. What else do we have? A Fed. No, sorry, Scott Bessent is in cahoots with the Japanese government. You have GPIF, pension funds. They are selling foreign assets, buying domestic. The effect being the yen goes to the upside. So you have four major teams 4 massive reasons why the yen should appreciate. That's why I like this position, and I'm still holding 30% of this short on the Swiss yen. I do want to mention the sponsor of today's video, which is going to be Ola Prime. So if you're looking to get funded, Ola Prime A1 Live gets you 20% off. So one thing that is really good about this prop firm, there is no consistency rule. No consistency rule. If you're a swing trader, you know about this. Whatever you're buying, especially in the trading niche, check out the Trustpilot. Okay, 4.5 out of 5 for this niche. That's pretty good. 3.1K reviews, pretty nice. Read through the reviews. Okay, read through them. See what people are saying. Join a Discord. Join the A1 Discord. You can even join for free. There's a couple of traders that already got payouts from Ola Prime and had a good experience. So do check them out. Do use the code A1 Live because you can get 20% off and you can get a really good price. Crazy ratio nowadays. Keep ripping with slight pullback. Perfect to stack longs. I'm out 4226. Now waiting for consolidation. We got the big candle. Well, congrats, Max. I'm guessing you were long on gold, which is pretty good. So looks like this week the main theme is a dovish Fed. A dovish Fed, which is bringing the dollar down and everything else up. Now, for me personally, I'm not playing it. Personally, I thought the Middle East was going to last longer. I thought the Strait was not going to open. Well, it's still closed. The Strait is still closed, but the market is pretty much pricing in that it's going to be open soon. And I was thinking inflation goes way above 3, 4, 5% and that the Fed will need to hike rates. That situation has changed. Looks like the Strait will be open. The Fed is just going to stay dovish whatever happens. And the game plan for that is to sell dollars. Anyway, that's about it. Thank you very much. You have Tiger coming on in 30 seconds. You can catch me tomorrow. I'm doing 2 segments. And yeah, good luck with gold to anyone who is trading the breakout. Yeah, that's it. Goodbye.
Don't go anywhere, traders. The show will be right back with our next show host. But before we get back to the show, I wanted to mention today's live stream sponsor, Ola Prime. Ola Prime is one of the fastest growing prop firms that I've seen in the space, and they offer a super wide range of different account types. Whether you trade Forex or futures, whether you're a swing trader or you're a day trader, they have multiple different account types, and they have some of the most competitive pricing that I've seen in the industry. And check out this publication from Deloitte, who did an audit during a select period of time on Ola Prime and its payout legitimacy. One of the big things that Ola Prime is well known for is their very fast payouts. They have this posted up all over their website as one of their main reasons that traders like them. From what we've seen, they also have a very strong reputation overall within the trading space, and they are a proud sponsor of our everyday trading stream here. And for a limited time, if you use our promo code that you can see on the screen right now, A1 Trading, you can get 20% off any of their accounts. And using our discount code lowers the barrier to entry, meaning that your challenge costs you less and gets you that much closer to potentially getting a payout someday. Of course, to throw my 2 cents in there, I'm a big fan of not trying to get funded until you feel you are actually ready to do so. So if you feel you have the skills, if you feel that your trading is up to par, and you do your due diligence on Ola Prime to see if it's right for you, then make sure use our promo code to get that extra discount at checkout, and we'll be dropping the link to them down below in the live stream chat. You can also find it in the description, and we'll have a QR code on the screen right now that you can scan if that's easier for you as well. So thank you to Ola Prime for sponsoring today's live stream. Now back to the next show.
What's going on, everybody? Hope you're doing well. Happy hump day. Did you miss me? I had a little bit of a scheduling issue the first couple of days, but I'm back, ready to roll. Got some storms rolling in. Hopefully I don't lose service with you guys, but it should pass. This too shall pass. Yeah, as far as Ola Prime goes, guys, he mentioned Deloitte in the commercial there. So obviously the goal is 1 hour payouts, but they calculated it out over the 6-month period that Deloitte came in and opened up their books. The average payout time was actually only 13 minutes and 27 seconds. So they market it as 1 hour, but the bulk of them are done within 15 minutes. So that's just unheard of. So Yeah, I just thought I would throw that little tidbit out there. But yeah, it was a whole 6-month period. They did that Deloitte study that they came in, the third party. So really cool stuff, really fast payouts, guys. Definitely, if you ever have any questions on that, let me know at Trade Like a Tiger on X. Probably the easiest way to catch me, easiest place to catch me. But and then yeah, not to mention his code A1 Live to get your discount there, 20% on the account of your choice. QR code is on the screen as well. Guys, let me know what you're looking at. Let me know if you have any specific tickers, anything you'd like to look at some levels on. We can definitely take a look at that. I got to say, I got trumped and bessented on my Nikkei short. So, you know, obviously the hopium is there from the market as far as the possibility of this deal getting done and the Hormuz Strait opening up. The data is still easily pointing bearish for the Nikkei. But hey, you know, took a small loss, tiny one. I think I only wagered 0.1% on that one, that particular one, because I was comfortable with the trade, but you know, that trade was made the other day before all this rhetoric came out. So you just never know. You know, that's a lot of ways you lose trades. That we lose trades is when we have everything absolutely perfect, and then geopolitics comes in and kind of throws a wrench in everything. So hey, no big deal. We dust ourselves off and we go find the next trade idea. So taking a look over here at, and by the way, we did obviously have a miss on the services PMI data that came out earlier. So I do believe, and it was already, I think the previous one was bearish as well, if I remember right. Let me go double check my work over here. Yeah, the previous one was bearish. So this won't change the percentages, guys, on the dollar. We'll still remain at a 30% beat rate. So yeah, bearish look, as far as I'm concerned, just from the data itself, continued on the dollar. But what's the dollar doing? What is it doing today? It's actually dropping into that demand. So we got to be careful, guys. If you're trying to short dollar, I would personally feel comfortable if we kind of follow that yellow trajectory line there. Just go ahead and get a break through the rest of that, and then some type of retracement on whatever, you know, pair I'm pairing it with, whether it's the euro, the pound, or whatever, for, you know, to bounce into an overhead supply on that particular type of pair, pound dollar, euro dollar, Kiwi dollar, something like that. So I just want to see that, because it is obviously giving us a little bit of a hiccup. Obviously, also the stock market has been rising pretty nicely based off that hopium, which again dragged up the Nikkei and stopped me out for that small loss. So I just want to see a break of that structure. I don't know what you guys think about that. That structure was also a former resistance that became support. So I've kind of got two lines simultaneously going on over here. The remnants of the demand, and then that former resistance that turned support. And actually, we could even drag that a little further into this little line over here. So yeah, that's the whole point. I would just feel more comfortable short if we break all that nonsense. What we got over here? Aussie yen. Look at that for you. Aussie yen. Quite the bottom. It's quite the spike, isn't it? Let's go look at a daily real quick. Oh, we're on the daily. Never mind. Yeah, starting to kind of bounce it. So we bounced into a former resistance point from, yes, 2024, July 11th. One of my other sister's birthdays. So that just so happens to be one of the points where we crossed. Now it turned into support over here, that former resistance to support. So is this going to become another support? Well, it's definitely given us a foundation, right? Let's do this. I want to look at my moving averages real quick. So let's get that turned on just to see where we're at over here. I want to go to a 4 hour. Yeah. So I would, you know, for me, if I had a reason to buy Aussie yen, which I don't right now, because I don't think the data is quite matching up. I'd like to see a break. I'd like to see a new series of highs and lows, because over here you got a little bit of former support that's also turning into resistance as we speak, or potentially could become resistance. So let's break that. For me personally, I want to see break and close and establish a new low, a new high, And then we could drop into a demand, whatever demand would be created potentially in this area for a long. So that's what I would want to see. Let's break a structure here. Let's break a structure here. I want to see 2 structural breaks on some of these higher time frames. And then that would turn this. That would turn this into my impulse leg, because it takes a lot of money to break a structure. So that's an impulse move. And then look for a demand somewhere in this area. This is just me kind of plotting and planning it out to what I would want to see if I were to get involved, guys. So that right there would be the entry. Okay. Obviously, I would find, go and refine it on a smaller time frame. But if I can see at least 2 structural breaks, and if I can at least see a higher low come into fruition right here, then that would make me feel a little more comfortable with a long position, if I had a long bias on the edge finder, which again, currently we do not. Okay. Aussie yen is what currently? Where is Aussie yen? Neutral, so +1. And again, that's all because of the trend, because the data looks okay. If we're looking at the fundamentals, it looks all right. Not really getting any help on the COT retail sentiment combination. So it's pretty well awash, but the data looks great. The trend does not. So just need to see the trend kind of turn around. That's what I would look at if I were trying to find a place for Aussie yen. Gold only read bullish like last week. So anyone who was bearish on it weeks ago was right. We only use the data. We have not predict, even if the prediction is right. Data. It's all about the data. And for me, breaks of structures. Let's go to gold and silver since you brought that up, because we obviously did have quite a hell of a spike up yesterday, guys. Okay. Looking over here on the right side. So we broke through one call wall. We broke through a second call wall. We broke through that supply, that 30-minute supply. We broke through the remnants of the 4-hour supply. We also broke through the remnants of the daily supply from back here. So just like the yellow line shows there, that's half the battle right there. Now on this 4-hour time frame, this 4-hour candle that's peeking through, I just want to see a close. If we get a close, if this will close up here, and this candle has what, 2.5 hours left, okay, according to my time zone over here. So 2.5 hours left to close. If it closes here by 12 p.m. my time, so noon central, then all I need is just a retracement to a demand zone. Got one drawn up right here, guys. So this is probably going to be the one I'm keeping my eyes on for possible entry down here. As always, not financial advice, but that's what I'm looking at. We did break that triangle. Okay, I had that triangle line drawn up, this down trending triangle. We had this higher low back here. Remember, this is what gold has over silver as far as I'm concerned, because silver has not yet given us a higher low like gold has. So triangle break, supply zone break, call wall break. Okay, major points. Now I just need a close. Give me that close. I'm waiting on that retracement, guys. Basically right there at about the 4,085 level, give or take. And then as always, if and when price returns, I just got to go through my refining process, see if I can find a confirmation entry. Okay, bounce into the zone, break a structure, and then retrace from there and actually look for that second zone. That's your confirmation entry, or second chance entry, as they call it, rather than just a limit order. I don't think I would personally want to do a limit order on something like this, because, again, you zoom all the way out and it's not quite looking super strongly bullish at this point. Okay. So anyway, that's what I'm looking at for gold. And then, of course, as far as overhead zones go, I got a zone up here. I got a zone up here. And it just did not surprise me to see that there's call walls sitting right there. So when we get these call walls, guys, remember, these are bullish. So, that's why I look for the retracement to kind of suck up their stop losses, depending on where they put them. And then look for the, obviously, the cheaper price, take away, shake out the weak hands, find a cheaper price for a buy. Okay. So that's what I'm looking at for gold. Again, silver is kind of a similar situation, except we haven't really gotten a higher low yet. Low point, lower low right here. Now we have the higher high. Okay. If you consider this the high, but I would feel stronger if we broke that high. And then, of course, this is the other problem I see with silver is we have this overhead supply zone confluence to start worrying about. Maybe not so much the daily, but we got a 4-hour up here where that second set of eyeballs is just sitting there waiting on price. So that's just a handful of reasons I don't really like silver at the moment. And I'm going to personally stick to gold. I don't know what you guys think about that. Let me know your thoughts on that. But this is definitely a good sign for the would-be bulls. And it's matching up our edge finder. So I think on edge finder, we gained another point of strength, didn't we? Isn't it like +5 now? Yeah, +5. So we had a lot of +4s over the last few days, and now we're at +5. So just another point of strength. Let's see what you got on here. Dollar yen says Riffin. Yeah. Dollar yen. So dollar yen neutral. However, let's go take a look. Still got intervention to worry about. Still got remnants of both rate statements that came out last week, Wednesday and Thursday, that are still kind of playing with this. Where is dollar yen? Dollar yen. Is it on my list here? Am I missing it? Oh, it's all the way at the bottom. -3. Okay, there you go. So obviously the technical is completely flipped on us, guys. Data slightly favors. We'll see how that treats it. And as far as the chart is concerned, though, go back over here. As far as the chart is concerned, yeah. So on the daily, we got our moving averages that have flipped around. I would have really, if I'm trying to short this thing, I would have really liked to have seen it break this structure here. Would have just made me feel just a little bit more confident about looking for potential shorts on it. But at this point, retracing all the way from where it did to these overhead supply zones I drew up, guys, that's still quite a move. I mean, how many pips is that? Give or take 360 pips. So that's quite the retracement. The ATR is super huge right now. Remember, this thing averages, or at least during June and July, averaged a 73 pip per day move as far as the range goes. Well, we're currently at 121 pips. So 740, that's twice the volatility right now. So you guys hear it set off, or you might have heard it set off. And if the volatility has doubled its average, do we still want to look if assuming let's just say your average risk is, let's just say 1%, which I don't know. I feel like that's a little high, but that's just my taste. If it's 1%, well, do you think you should still be putting in a 1% risk in the current environment, or would you maybe consider cutting it in half because of the volatility? Okay. That's just something to think about, because essentially if you lose a trade at a 1% risk on double the ATR, double the average true range, it's basically like losing 2 trades, right? Or just losing it halfway, or with half the time or half the speed. So it's just something to consider. That's why I like to always know where my average true range is for an asset. Just to see how crazy it is. And clearly it's pretty crazy right now. Double the range. It's just insane. So anyway, but yeah, I am kind of interested if we do happen to get any more bearish strength, if we start getting it a bearish signal on the edge finder. Well, I think we might have a possibility of some zones up here. So it's a daily. Within the daily, I do have a couple 1-hour zones. I think it is. I think that's what I drew up. Yeah. So there's a 1-hour green candle. Here's my gap showing supply heavily exceeded demand. Up a little higher is another 1-hour candle with a gap showing supply heavily exceeded demand. What about my volume? What about the volume on this one? Okay, yellow VSA bar. If we look all the way down here, so that's volume after a blue bar. So that's above average volume, guys, after pretty much nothing. Remember, the volume bars change in size. The yellows, the reds, the greens, all of it. Because it kind of goes off of what have you done for me lately? How busy or not busy have you been for me lately? So that's kind of where that's kind of the gauge I like to look at. It's not so much the size of the candles, it's how big of a change did we go from the previous few candles. And when we get a yellow candle after a blue candle like this, okay, that's some institutional activity starting to take hold. Now the same can be said for this one up here. So we got 2 zones. Which one do I take? It's up to you. If I had a very strong bearish reason to short this, I might take this bottom one. If I had a not so strong, like we currently do, let's just say we have a -4, -5, -6, I might just wait for a little bit higher retracement. All of that is inside of the daily. I think that was a daily. Was that not a daily? A 4 hour. Oh, shoot. I colored this wrong, guys. I'm sorry. So this is actually a 4 hour candle. That's okay. 4 hour, 1 hour confluence. That's what I did. I'm sorry. I lied to you guys. That should be red. If we go back over here, I'll just get rid of that so it's not overkill. And I'll just put a couple lines up like this. There you go. The white line represents the 1 hour zone. There, that's a little more like it. So 4 hour, 1 hour confluence. Humongous range. 160.5 at the top. We'll call it 159 at the bottom. So that's 150 pip range on that 4 hour zone. This 4 hour red candle right here. So yeah, I would probably be interested in this one here. After all, we had a really strong gap, expanded range candle, broke structure, and then just kept going. So that's trade idea number 1. Up here is trade idea number 2. So the white lines, basically, guys. That's what I would personally be looking at. Again, I just wish that this thing would have broken this structure over here. Okay, the Cinco de Mayo structure, May 5th. So that's what I'm looking at on dollar, yen. I better put an alert in there just in case the Edge Finder does give us another bearish point or two. Okay, so I'll just throw that up through. I'll just throw that up through next week because I don't know if or when we'll even get that alert. The data has obviously dropped. The data for the yen itself, let's go double check that, is down to 50%. So remember, the yen was up there for a while at the top, close to it. July 30th, we had a neutral unemployment rate, and we've had a couple bearish reports come out in the last week. Retail sales, MPMI, that's the manufacturing sector. Although the manufacturing PMI is still comfortably in expansionary territory, we just had a 0.2 point miss. Okay, so a couple bearish boxes on there, middle of the road. With dollar weakness, absolutely, I'd be interested in that. Until they intervene again and throw a wrench in it, right? Are we going to see another intervention? What do you guys think? Silver has a 1 month channel, so it can go either way. Yeah, exactly. Gold and silver, as far as I'm concerned. And that's why I think a lot of us have been sitting on our hands lately. We're just looking to see which structure it wants to break. Does it want to break high? Does it want to break low? Silver has still been, to me, it's still comfortably. Let's go double check silver over here real quick. Weekly, daily. Yeah. So, yeah, I mean, that's the thing. See, when I drew this supply zone up here, that's back when I was considering some shorts, but not anymore. Not with the data flying the way it is. Not with all the turnaround the dollar is seeing going from bullish to bearish. The reciprocated version of that for gold is obviously bullish. So, yeah, that's all I can really say on it. I just need some structural breaks on this thing, guys. As far as the Edge Finder, we still have pound dollar at the top, still got pound yen. I'm just not really that interested in the yen pairs until they all kind of base out. Kind of give me a new set of structures because of how volatile it's been. So pound dollar, since that's still at the top of our list, let's go have a look at it. Over here on the right, we got comfortably daily moving averages moving to the upside. We do have an overhead supply zone we got to worry about, but we're not quite there yet. We had bounced in over here on this 4 hour demand, guys, last week. And I was just annoyed it didn't drop just a little lower because I was personally looking at the 1 hour confluence. Talking about this green rectangle here. That's the 4 hour demand. The 1 hour demand is that white line right there. And then the distal line is down here. So we just missed it. Just missed it by a few pips. Did get a little bit of a push up. But at this point, I like it because it's at least created a little bit more liquidity from these potential stop losses hanging out right here. Because that candle right there, nice expanded range candle, yellow VSA bar, a lot of institutional look on that. That broke structure. So I think there's some pretty decent you know, a little bit of liquidity. Again, guys, and the question was brought up last week, is that even significant or not? That's not the reason I would be getting into the trade. The reason is the unfilled order potential from the demand zone. That's just a nice little cherry on top. And then you're also kind of having a little bit of a similar thing happen right now. Okay, just a little bit. Just a little bit. Now, I wouldn't say that this is a whole lot yet because we haven't even broken a structure. Stop losses, guys. Sell orders from buyers, stop losses that banks need to fuel their buy orders. So I'm still going to wait on this projection. Still going to wait on it to drop into that zone for possible look on pound dollar. And that might be one of my favorite ones for the bullish side for now. Pound Swiss, pound CAD. I wanted to look at those too. Pound Swiss. Yeah, pound Swiss is all over the place. Now I've got some zones down here. Guys, you remember here a few weeks ago, I was talking about all these stop losses right here that a bank could potentially accumulate. So they took out this set, right? They took that set out. They took that set out. So I can delete that. And they took out that set. And then what happened? That just so happened to be where they started pushing price to the opposite side. So that is now taken out. So we're left with one little liquidity pocket right here, I think, along with the unfilled orders. Wider range or wider stop loss because the range is relatively skinny. But this thing has just gotten just silly sideways. That's as silly as it gets. Okay, about a 3-week sideways move outside of this liquidity sweep we saw. Okay, that took out those 3 pockets I told you. So yeah, I'll still keep an eye on this green projection line as a possible, possible long. If I just go back to the 3-hour or 4-hour real quick, keep an eye on that as a possibility. But at this point, it's too expensive. It's nothing I'm interested in buying. And also, we have a former supporter resistance line, which is basically where it stopped. What did I draw up in the past? Where did I draw that up? Back here. Okay. Support became resistance. Looks like it's given a little more resistance. So I would love to see a break of that and then a retrace. That would actually probably be a little better at this point. Now that we're getting all this congestion up here. So, perhaps we get a break above this nonsense here and then a retrace. Okay. Not to draw too many lines up there for you guys, but that would actually be a little better. That'd be a higher time frame, basically expansion legs, going back to master pattern and kind of your usable way of looking at Wyckoff method. Contraction, expansion, trend phase. The trend phase leg is the one I want to bounce off the demand zone. So that would be pound Swiss. What did I say? Pound CAD, I think was the other one up here. +8, yeah. This one might look a little prettier, guys. So moving averages are looking good. Trend is obviously up, higher highs, higher lows. We don't really have any major overhead resistance until we get up here. So that would be my daily supply that I would want to be weary of. Okay? So that's offering me quite a bit of reward risk room as far as I'm concerned. So now we go over here to the left and look at the 4-hour and look for demand. And that's where I kind of came up with this. Might have been a 1-hour, actually. Yeah, 1 hour. So again, guys, I prefer 4-hour demand. But if it starts at a 2-hour, if it starts at a 1-hour, that suffices. It's just a little noisier. That's the only challenge. Okay. So maybe a little less risk. Last week I drew this projection line, this green one, meaning I wanted to see this structural break, suck in the longs, and then smoke them to the downside to where we can bounce into demand. So the picture's looking good. Now I just needed to drop at this point. Okay. Just needed to drop into demand. Might have a play here. Again, you're likely going to have some stop losses here, some sell orders, because these buyers had the strength to push price up and break this structure right here. Right? Strong break, strong close, decent volume. And then you went a little bit higher. So now I just need a sweep of all that. Sweep this, come back into my demand where we had quite a few yellow candles, guys, above average tick volume, above average trading volume in that area. That created that push away, that strong gap. So that green line is what I'm personally keeping an eye on, that green projection line. It would have to pierce my 200 EMA. That's a good thing. Okay. Just push that a little forward. By the time price comes down, that'll probably get a little wavy like that. break, pierce the 200. Oh, come on. Get that off. Pierce the 200, go a little deeper. That's how I like to see my 200. I like to see the 200 just a little higher than the demand. That way it has to pierce it and potentially take out some stops from those traders that just like to all day just sit around and just buy the 200 EMA without any other real structure built around it. So that's just another odds enhancer for me. So yeah, I need to get an alert right there as well. Just get that set there real quick. And custom date, we'll just throw that out through next week as well. There we go. All right, we're done. So alert there. So that's going to be the top ones I'm looking at from a bullish standpoint. And then on the bearish side, real quick, guys, Nikkei, which was the one I took that small L on. We are currently in another supply. So we had one a little higher up. I don't know about this. You know, I think right now the markets are just kind of listening too much to Trump and Bessent. They've been spiking. You've had some, you know, well, as far as the U.S. goes, you've had a whole bunch of AI earnings and things come out of late. And at this point, it's just become the herd mentality. You get some index pushes on the U.S. side, and it often rises the rest of the boats. Okay? The high tide, all the boats rise. So the yen seems, or the Nikkei rather, seems to be appreciating. So I don't think that I'm going to, I think I'm going to stay away from it, at least until we get a little more clarity on if Bessent and Trump are just feeding us another line of, hey, we're just this close to writing a deal up. Hey, we're this close to the Hormuz opening up. But when in doubt, guys, always just go to Marine Tracker. This thing will show you where the status of the ships are. The red dots are all the boats just chilling, sitting out there, hanging out, probably getting seasick, waiting to pass through this channel, guys. They can't get anywhere yet. So anyway, ladies and gents, I think that's all my time. So have a wonderful day. Euro dollar, I saw that just the last second. I'm sorry. Let me just throw this up, James, real quick. Moving average is up, looking good. Yeah, I've got an alert at 114, we'll call it. So it still has some work to do. It's a little pricey for me. You're close to an overhead supply, kind of what that yellow line shows. Let's talk about that more tomorrow. I really need to see a drop down to this point. Now that we've broken this supply zone, that's a good sign. Okay. So it's got a ways to go, about 100 pip drop as far as I'm concerned. All right, guys, that's all the time I got for you. Have a wonderful day. Stay safe out there on this lovely hump day, and we'll be back tomorrow. Take care.
Have you ever wondered how you could find more trades like this gold runner, or the S&P 500 breaking out to all-time highs, or this sell-off in dollar Swiss franc, which was a clean short opportunity? Well, all of these charts shared one major thing in common. They all had powerful macro fundamental catalysts driving price decisively in one direction, presenting a really strong trading opportunity. Hi, my name is Nick. I'm a 10-year trading veteran and the founder of A1 Trading, where we build market scanning software that help traders to track macro fundamentals, crowd sentiment, and the commitment of traders' data to best understand where institutions are moving their money. Our tools automate everything from studying jobs market data, inflation statistics, and economic growth metrics, bringing it all together into a scorecard or rubric that helps to spot better potential trading opportunities through our insights offered by the tools. So if you're looking to access our tools, stream viewers get extra discounts, and we're currently offering payment plans as an option for those who would like to split up the cost of our tools into a couple monthly payments. Alternatively, we also offer a free Edge Finder tutorial course, as well as fundamental macro course that can help you to learn the concepts behind the tools. Scan this QR code that you see on the screen right now to be connected with a real person from our support team. We have helped thousands of traders level up their trading through insights, dashboards, and automation. And we are passionate about this subject because having the right tools that hedge funds and proprietary firms keep locked in key is a powerful game changer for the average everyday retail trader. To explore our products, payment plans, and just to find out more and speak to a real person about this, scan the QR code that you see on your screen right now. Alternatively, the link can be found in the live stream chat or in the description of the live stream. On our website, you can find a collection of both free and premium trading tools that our team has put together to help traders take their trading to the next level. Well, you might be wondering, how can your tools help me? Well, whether you're a swing trader or a day trader, our tools are meant to help traders traders of all different levels of skill, time frame, and traders that trade Forex, commodities, indices, stocks, etc. At the core of it is automation, simplicity, and bringing it all into a one-stop shop for you to scan markets more efficiently and build a curated watch list of potential trade ideas. So regardless of what you trade, we hope that our website helps you in some way. And if you have any questions, feel free to contact us using the contact button in the top right or the live chat feature available on our website. We also offer free courses on fundamental and technical analysis on our website, as well as a range of free tools like, for example, our risk calculators that can help traders to level up their trading without paying a dime. Our goal is that our tools and site help you in some small way, and we wish you the very best in your trading journey. Thanks for listening.